Enough of that. What's up, everybody? It's almost like I haven't seen you in a few hours. Good to see you. Good to see you. Took a little break. There. Went outside, sat in the sun a bit, got a little lunch. Threw the ball to my dog. Got me a little pink slush beverage. I know you guys aren't big on the energy drinks. I get a lot of hate every time I bust one out, but sometimes you just gotta crack a little energy drink, just a little. You don't feel that? Oh, yeah. Gets me dialed up a bit, Gets you dialed up a little bit. You got to be dialed up a bit in this market. Good day, though. Good day so far in the portfolio, up $7,000 officially on the public portfolio, $435,000. SoFi making a bit of a runner. SoFi up $600 today. That's a beautiful position. We got a $1,000 purchase on SoFi at $15.20. $15.20 purchase there on SoFi. Bad boys running. Looking pretty damn good. S&P 500 position printing some gains today. Up $6,500 on the day on the S&P 500 position here in the public port. Not bad. Hyperscaler portfolio looking juicy. Good little juicy squeeze here on the hyperscaler portfolio. Google down a bit. I think that's reasonable. I think Microsoft scared people about Google, but we're here both, baby. Who cares? Microsoft up 16.5% on the day. Our position looking real juicy. 17% gain in about 6 days. We started up this hyperscaler position not too long ago. And now we are up 17.4% in the short term. And Microsoft's actually breaking out right now. There's that piece of me that wishes I'd have bought a little more. You ever get that little thing in the back of your mind where you're like, dang, I should have bought more. But what can you do? I still got some capital to deploy in these positions. So, yeah, it's all good. I still have about $5,800 left over to deploy in the hyperscaler portfolio. Only have about $4,200 out there. So, yeah, pretty good day in the portfolio here. Not 100% sure it's going to last. I guess time will tell. Time will let us know how we're feeling. But all in all, I'm feeling pretty damn good. I ain't going to lie. I did want to buy more SoFi. And, maybe the opportunity's not over yet. But I did want to buy a bit more SoFi. Kind of sucks to not get that opportunity. You know what I mean? I did think there was a chance I was going to be able to grab SoFi under $15 again. I thought there was a chance, but it's like, this is the strongest bounce off the buyer zone that SoFi has given us since it hit it, which makes me go, ooh, these buyers are strong in here, buddy. They're strong in here. SoFi can still roll over. It's still in a downtrend. The craziest part is, even after today, it's still in a micro downtrend. It's really just returning to trend right now. Matter of fact, look at this. Say if you want to cut it here, SoFi's still in that downtrend. So SoFi easily can do this, right? It can easily roll down. The whole market would have to reverse, I think. So, but it is still possible. You know what I mean? But I'm kind of there. I'm in a weird spot when it comes to SoFi, because on one end I'm like, run, baby, run. Then the other part of me is like, crash. Give me the chance. Crash. So I don't know. It's just after that earnings report yesterday, I'm just so amped on SoFi, man. I'm so amped on it. That earnings report yesterday was so good. 1.1 million new members, dude. But I guess we'll see. But nonetheless, really solid day. Shout out to all the homies who got in on some of those purchases. We did some decent buys recently, actually. Now that I'm thinking about it, a lot of the purchases that have been done recently are looking pretty good. Caught a 9% gainer there on Micron. Talked about that earlier. But yeah, scooped $1,000 of Robinhood at $88 earlier this morning on live. That is sitting right, pretty flat, $88 purchase, pretty flat, about where it was. Outside of that, yeah, got some deploys into the big ones. Took a little $1,000 scoop out of SoFi. Yeah, but we do have a big afternoon on our hands, folks. We got a big afternoon on our hands, folks. I'm sure you guys saw. We got another chaotic day ahead. Hey, just want to ask, y'all remember on Sunday when I said this was going to be one of the wild weeks you've ever experienced? Yeah, you're welcome for the warning. You remember in that comment section, everybody said, Tyler, stop saying every week's going to be a wild week. I'm sure this week won't be that. Yeah. Yeah, here we are. But we have another wild day ahead, to say the least. We have Apple and Amazon earnings tonight. Gonna be big ones. Gonna be big ones. Yesterday, we saw Meta falling 10%. Microsoft pumped 7% after hours. And I mean, you can see how that's continued today. Ever since their earnings yesterday, based on what they said, Meta has just continued to get absolutely demolished. This thing is down on the day so bad. I mean, we're talking about, yeah, 9%. 9%. Microsoft, on the flip side, up 17%. And I think Apple and Amazon are going to join the crew. I think they're going to join the crew, and it really, really depends on what they say. Now, Apple's a little bit different, okay? And that's one thing I want to keep making clear. Apple's a bit of a different story because Apple's not really getting into this whole CapEx situation, okay? Apple's basically said, you know what? We're just going to do what we do, baby. And that's release the same iPhone with a new button in a different place every year, charge $1,000 for it, and rake in some cash, baby. That's what Apple does, okay? That's what Apple does. Amazon, on the other hand, bit of a different story there, folks. Bit of a different story when it comes to Amazon. Man, oh man. Bit of a different story here. That's for sure. Because we have Amazon, who is in the hyperscaler world, and I think, whatever they say when it comes to CapEx is going to be the thing that tells us where this goes. So you better get dialed up because it's going to be a long night. I think I saw that Apple's earnings call and Amazon earnings call are at the same time. Correct me if I'm wrong on that. Someone in the chat, correct me if I'm wrong. I'm pretty sure they're at the same time. If that is the case, I'm listening to Amazon's instead of Apple's. And I think most of you would agree that's the move. Okay. Hopefully they're not at the same time, though. That would be just stupid, but dumber things have happened. We got Apple, 4.899 trillion. We got Amazon, 2.5 trillion. Number 1 and number 5 coming in today. Want some earnings. So let's talk about what we're looking for. Okay. So yeah, we have so that's kind of the game plan. So this is kind of my thought process. Let me know what y'all think about this. So the first portion of today's live stream, we're going to go into the numbers. We're going to talk about what we need to be on the lookout for when it comes to their earnings. We're going to talk about here, let's go over here. So we're going to talk a little bit about the big ones, Amazon. We're going to talk about Apple. We're going to talk about the numbers that we're looking for, how this is going to impact semis. Yeah. I was actually going to do a video this morning on this stuff, which is why I have a full presentation made, but we're not going to need to do a full video. I did a live stream earlier, so we're going to just dive into the important stuff. We're going to dive into the important stuff today. So we're going to dive into the Amazon earnings report. We're going to talk about what we're on the lookout for there. We're going to, or you know what? Why don't we do it like this, actually? Why don't we do it like this? Let's do some analysis. I'm going to do some analysis across the market. That's going to put us around 2:30, 5. Then we'll do 25 minutes of getting ready for Apple and Amazon earnings. And then Apple and Amazon will drop their earnings. We'll go into their reports. We'll listen to the earnings calls. We'll do it like that. I think that makes more sense. So let's do a bit of analysis. We'll go through the market, kind of see how things are looking, and then we'll dive into the numbers for Apple and Amazon a bit later. Okay. Let me get my my little notepad here ready. I'm going to take some notes throughout this little session, There we go. All right. Okay, let's get into it then, huh? Shout out to everybody in here, by the way. Drop a quick little like ski-doo if you are in the stream. So let's start off at the top then. So we did a bit of analysis this morning. Let's kind of catch up on what's going on. So starting off with SPY. SPY is making a really good bounce. Really good bounce here. What you can see is that SPY came down into our buyer zone. I told you all, I said, look, this little area, this little zone right here, this is your buyer zone. Your buyers have stepped in here. Your buyers stepped in here. Your buyers really stepped in right there. And I said, look, maybe you see the SPY, maybe you see these buyers step in here and try to force this price up. And if so, that could be a very good sign. That could be a good signal that things are trying to reverse. Doesn't mean that we are seeing the market fully reversing. Don't get me wrong, but it's definitely a good sign that the market's trying to reverse. You know why? Because a reversal up here opens us up for the opportunity. Oh, so it opens up the door of an opportunity for this downtrend to change. So check this out. Check me out, okay? High, low, lower low, downtrend. Come up, lower low, downtrend. So we're in a downtrend in this moment. But guess what just happened? SPY is attempting right now. It's attempting to break through that downtrend. And what it's looking to do is set the higher low. So you see how we had like, lower low, higher low? That's step number one, right? That's step number one. That's us that's SPY trying to change that downtrend. So now what you're going to look for SPY to try to do is come back up and break that high. And guys, if it breaks that high, it doesn't guarantee by any means that we are about to go on a parabolic run, but it gets much more likely. It gets much more likely when you start to change that trend. The trend is your friend, folks. And we're going to be looking for SPY to come up and start breaking through that red zone, and that's still a good ways away. I'm not quite convinced that's going to happen. That realistically maybe wouldn't happen until next week, and that means we got to get through the weekend and all that, but without anything stupid happening. That's quite difficult, right? So I'm not going to go as far as to say like, oh my God, everything's back. Let's everybody freak out, jump with joy. No, none of that. I'm not really going to go that far because it's just a sign. It's just a clue, but it's a clue worth paying attention to. Now, what will be interesting is if we close the day, if we see SPY close the day above, let's call it 742.70. If it does, we have a bullish engulfing candle. And a bullish engulfing candle is actually a very bullish candle. When you get bullish engulfing candles, you can usually see a little bit of a march upwards. The last time we got a bullish engulfing candle was right here, which is basically when the size of the green candle is bigger than, like, completely engulfs the size of the red candle right next to it. You see that? Or kind of similar to this one as well. You had your red candle here, your bullish engulfing candle. They're both a little bit off because of the wicks, but I think you get the general gist of what I'm saying. It engulfs that previous candle. That usually can give you 2 or 3 days of positive movement upwards. It's usually it usually moves in 2, 3, 4 session periods. So, if we do see SPY close up here without anything super unfortunate happening in the news, which is a big guess, that's a big gamble. Yeah, you could see SPY trying to slow march this bad boy back up to, 750, 752. And look, naturally, it's going to be not easy, folks. So you got a golden zone sitting above us. We got structural resistance sitting above us. We got sellers sitting above us. South Korea got to wake up at some point. Let them sleep. You get what I'm saying? Let them sleep. We got all that going on. So it's going to make it a little bit difficult for SPY to try to break up towards these high levels, but it might do it. And this is a good sign that it's possible. Now, with that in mind, one thing I'm curious about, we have the room for it, right? SPY on the daily HCI is sitting at a minus 2.55, even after the move we're seeing right now, meaning there is more than enough room up here for SPY to try to give you another climb back to the upside. And on your daily chart, your buyer zone or your seller zone's not sitting until 756. You're not sitting until 756. And so what all of this means is that SPY has the room. It has the opportunity now to come up to 756 and break it. And if it does, we're looking at the stock market going for new all-time highs. We're looking at the stock market going for new all-time highs if it pulls this off successfully. And I think that would be the shocker. Who expected that? With all of the negative sentiment that there's been over the last few weeks, especially when it comes to the AI trade, who would have expected SPY to pull that off? I wouldn't. I didn't. But it's the exact reason why I was accumulating. Because everybody's been sleeping on SPY. That's why we were buying. That's why we were dollar cost averaging. That's why we were going into those positions. It's why whenever you look at my VOO position. When did I purchase? Hold on. Let me show you what I'm talking about here, folks. Look, July 23rd. July 16th, July 13th, deploying what? Just $2,000 over the last 2 weeks? Because in these moments, when you're pulling back and it's a little bit suspect, it's a little sketchy, it's where your opportunities open up, folks. So, we could be looking at this S&P 500 trying to gear up for another run. We could be looking at SPY trying to gear up for a new all-time high, maybe pushing all the way up towards $782, And if that is the case, we could be looking at the 5% move here for the S&P 500. And you bet your butt I'm looking forward to that if that comes. 5% move for me is $20,000. That's $20,000. You know what I mean? I'll happily take that. But it all depends on if it can keep this momentum. And today is going to have a big impact on that. Apple's earnings, Meta earnings, it's going to have, or not Meta earnings, my apologies, Amazon earnings, it's going to have a big impact on whether or not that's possible. Because truth is, right now, we're still in a downtrend. So yeah, the door to the upside is trying to open right now, but I need you to understand something. We're not out of the woods yet. Look, I see all of these influencers over the last 2 hours talking about we're so back, especially on Twitter, bro. Twitter's the worst. People are all on X. We're so back. Market's breaking out. The market's not breaking out. It's not breaking out. And that, dude, I'm so precise about certain things. I'm annoyingly specific. My wife hates it. I'm very annoyingly specific about the way people say things. I think I'm on that, I think I got a little bit of that. You get what I'm saying. And when people say that the SPY's breaking out, the SPY is not breaking out. You know why the SPY's not breaking out? Just look at it. It's not. Look, it's not. As of now, it's not. Now, give it an hour and a half, it might be, but right now, it's not. SPY's sitting in the trend. And guess what? Just like it pumped and dumped and pumped and dumped and pumped and dumped and pumped and dumped, it could pump and dump again. And it erases all of this sentiment that's being created today. So no, we're not back. Yes, enjoy the moment. Am I enjoying seeing my portfolio up $7,000 today? Now I'm positive on the week after I was down bad on the week previously. I mean, at one point, not that long ago, I was down 10,000 on the month. Now we're back 7,700 on the day, baby. Yeah, it feels good. And I love the way it feels. I soak in these moments. I enjoy these moments. But I'm not going to sit here and pretend like we're back. We're not back. We're not back yet. There's no confirmation. Zero. There's not one confirmation that says we're back yet. And that's just for SPY. The same thing goes for the rest. So yeah, it feels amazing, but keep yourself together. Keep your shit together, dude. You got to stay dialed, bro. We're not back yet. So what are we looking for from SPY? We need to see it break the trend, and we need to see it come up and break that high. At minimum, it needs to break 743.60. What it needs to do is start coming up and breaking through this downtrend right here. Let it break the trend up here, the trend line. Let's call it right above us. Let's see it break 7. Let's see it do something like this. Let's see it do something like that. Let's see it do something like this. This is what I'm looking for. I need elevation here because I don't want to see this just roll. I don't want to see it roll over. That ain't good. That's no good. That's no bueno, folks. You don't want to see that. You don't want to see this thing get rejected here because you see how excited everyone's gotten today? Think about how everyone would feel if tomorrow we wake up and the S&P 500 is at 723. Think about the disappointment there would be in the market. Everyone got dialed up today, so excited today. Oh my goodness, we're so back, just for it to crash on their heads. All that margin gets liquidated. Oh yeah, that's the ruthlessness of this market we're in, and that's a risk. That's a threat. That absolutely could happen from here. And if you're not prepared for that, you're a sitting duck. You're a sitting duck. So that's why on a day like today, yeah, I'm excited, dude. I'm amped up. I got my freaking coffee going. I ate a great breakfast, played with my dog, cleaned my car out. Yeah, I'm in a good mood. But I'm not going to sit here and pretend. I'm not going to sit here and pretend like, OMG, we're back. It's not confirmed yet. And the same thing goes for most of our stocks, okay? Same thing goes for most of our stocks. Watch this. Let's go to Micron first. I know what you guys want to see. I've talked about this a couple times today, so I'm not going to harp on it too much. But you get the point. You get the point. Look at this. Bang, bang. This is your trend. While Micron is in this, it cannot have a sustained breakout, a sustained move upwards. It won't. We can even do it as simple as this. While Micron is in this red channel, listen to me closely, it won't have a sustained move upwards. It can't. It just cannot. It's impossible. It needs to break it for us to really look, because no one's looking for a gain. Who here for Micron is looking for it to go up 7%? No. When you guys say, are we back? You're talking about Micron going up 30% again. 18% today, 18% tomorrow, right? That's what people want. People want to see Micron back at $1,100. That's what they're looking for. That's not happening while we're in this red trend, in this red channel. It can't. It just can't. And it's going to be hard. I'm not going to sit here and pretend like it's going to be easy. It's going to be hard. Look where Micron's at. Look where Micron's at. Golden zone. Approaching the golden zone based on increasing volume. Good sign. Good sign. Very good sign. You know what that means? Well, I guess theoretically. Hold on. Let me see something real quick. Let me see the daily. Yeah, it's okay volume. Still got a little bit of time. It's okay volume. Not breaking out volume. Decent enough volume, though. But it says like, hey, this is a real battle here. This is a real battle that's about to happen at this golden zone. Look, we got a bullish engulfing candle for Micron. Last bullish engulfing candle we had would have been, I guess, that one. But I mean, that's it's been a while. Yeah, it's been a while since we've had one like this. Okay. And that goes to show that the buyers are sitting there and they're ready. They want it. They want Micron to break it. But guess what? Micron needs to come up and break the golden zone, then extend off of that breakout out of the red channel. Until it does that, Micron is trapping people. This could be bait to get people back in, then snatch the excitement right out their hands. It's like walking up to a kid in a candy shop and giving him a lollipop, and as soon as he goes to lick it, you just slap it on the floor. Gets all covered in dust and hair, just being an asshole. The market can be an asshole sometimes, right? And that could be happening here. It could be pulling in that fresh leverage, that fresh margin, just to rip it from you. It easily could be doing that. And so while Micron is at this golden zone and while Micron is pushing towards the top side of this channel, do not get too excited yet. Let it cook. Let it cook a bit. That's why I closed down those leverage trades. You guys know I had those trades open, little tiny trades. I'm not going to sit here and pretend like they're not. But it's why I closed, the SanDisk one. That's why I closed it for the gain. Why I closed the Micron for the tiny gain. Because I know the game that's being played here. I know what the market's about to try to do. I don't know if it's going to be successful or not. But I ain't sitting around and finding out. I'm not sitting around until I find out. I'm good on that. You guys enjoy that. Do we break golden zone? Do we extend up out of the channel? That's the game here, okay? Oh, you know, Xander. Dude, I'm locked and loaded, G. So, AMD, guess what? Same thing. Same thing. I need you to understand something with AMD. Let me show you something real quick. Daily, TH Toolkit. Let me show you something. You see that? You see what's sitting directly in front of us? That's big, boy. All this support right here, support right here, support right here. This is where your buyers were stepping in. And do you see how when you fell through that buyer zone, it became invalidated, meaning that the sellers took it over. And the second that the sellers took it over, you see how it flipped red? It means that we have a massive sell zone sitting in front of us, right on top of us. So while Micron's running up into the gold zone, AMD's running up into this massive sell zone. Guess what? That could be a trap zone. And right now, you look at that hourly, look what's happening. We're slowing down as we're hitting that zone. Sellers are stepping in, so there's a battle happening. Buyers are trying to push it up through this 496 sell zone. Sellers are stepping in and trying to hold it. Who wins? That's the game. If the buyers win and AMD enters back into this neutral territory, I mean, obviously there is a golden zone up there as well. Like you have your golden zone right here, right above that. But if you can't see, AMD first things first is breaking above 500, that's a great sign. And who's to say in a perfect world, let's say perfect scenario, the best case scenario, who's to say that AMD doesn't push up, recapture? This was a margin trap. This was a liquidation trap. Come up, break up, boom, boom, boom. Now you're looking at 640 to 715 AMD. This would be max pain for a lot of people because of how many people sold right here. Yep. The amount of people that got liquidated right here, this would be the worst possible scenario for them. And you never know. The market does it to you sometimes. So that's why I'm looking at AMD and I'm thinking, no, we're not back yet. But hey, you start to see AMD working itself back into this neutral territory between this seller zone and this one. That could start to open that bad boy up for something nice, worth paying attention to. It won't be easy. It would take this happening again tomorrow. People would genuinely have to believe that AI is back. But who would have expected it? That's the point. Who would have thought that was coming? That's what this market does, the unexpected, right? So no, AMD's not back yet. Let's see what happens if it breaks through the seller zone, okay? Topping out at 502. NVIDIA is in a very similar situation. As well. This one's a bit easier to read. Look at this. Let me just get rid of everything. This is what NVIDIA is doing. Very simple. NVIDIA saw a bounce. Then it saw a pullback. It came back to the golden zone. It fell through the golden zone. When you fall through the golden zone, you guys already know this. Where are your breakdown targets? Your first low, your 1.272, your 1.618. This is your staircase. These are your breakdown targets. This is where you can expect the price to start trying to come down to, okay? If it gets really bad, really bad, you might start extending down here. but more often than not, you don't, right? So what did NVIDIA do? Double topped, broke golden zone, came down to the first one, and it's now using this support, using this buyer's territory right here, this one, to try to push back into and hopefully above that golden zone. And then even if it does that, it does have still a bit of a trend that it needs to break. But you get the point. I don't think that's linear. Let me see. I just want to know real quick. No, it is not linear whatsoever. Okay. But NVIDIA is trying to come back and it's trying to clear back above that golden zone. So while it's under it, that is not, you can't say NVIDIA is back. There's no way you can say NVIDIA is back. How? There's a massive zone of resistance sitting directly above us. NVIDIA needs to come up through this zone. Ooh, now that's juicy. That's where things get exciting. And again, still, you have a little bit of room to work. You have a little bit of work to do at that point because you still have topside golden zone to break. But, NVIDIA coming up, breaking through this, coming back down, back testing, breaking through that, that's the sort of move that pushes NVIDIA back up to 230. That's the sort of move that pushes NVIDIA back up to 221. And what we're looking for is this sort of progress. This sort of progress to get out of this trend is what you need to see from NVIDIA, because without it, all we're doing is just setting lower highs and lower lows, right? And NVIDIA is still on track to come back to 175. So like you have Micron running into the golden zone above it, AMD running into a massive seller zone right above it, NVIDIA sitting below the bottom side of its previous golden zone, another major resistance zone. So basically, without getting, there we go. 10, sorry, I was reading 10 out of something. Okay, I'll get into that in a second. So with all of that said, when you look at your AI plays, great performance today. Chill out a little. Let's chill out a little bit. And this whole saying they're back thing, let's relax a bit. Room needs to, there's still some room, what's the word I'm looking for? Something we need to cover. There's some blank you need to cover. Is it field to cover? What is the word I'm trying to say? You got a little space to cover, field to cover. I don't know. I can't remember what the saying is. But yeah, so that's what we're doing. That's what we're doing. Feels great. Feels great today, though. Feels great today, though. You know what also feels great? Microsoft. A gap. Yeah, that was it, obviously. There's a gap we need to cover. Jesus Christ. Ground. Yeah, ground. My bad. Again, gap, ground, whatever. Anyway, there's some ground we need to cover. That's the one I'm looking for. Microsoft is doing something real juicy. Microsoft's doing something real juicy right now, fellas. Look at what happened. You can't ignore the signs. You can't ignore the signs. Microsoft comes up, breaks golden zone with ease. With ease. Not only does it break golden zone with ease, it also upward push breaks trend. Trend line, not the trend itself, the trend line. High, lower high, creates the linear trend. Microsoft comes up and breaks through that seller zone. So you had a major seller zone right here. Major seller zone right here as well. Two major seller zones. Microsoft cleared them with ease. Does it continue? Ooh, I don't know about that. But that's a huge sign. That's a huge sign for Microsoft that things are changing. And does this mean that Microsoft is back right now? No. Microsoft can easily still continue downwards. But there's an argument to be made that the bottom's in. There's an argument to be made that the bottom is in for Microsoft. Because movement like this rarely happens in the middle of downtrends. It'll happen every now and then, so it's worth paying attention to. But when was the last time we were in a sustained downtrend and Microsoft made a move like that, guys? The last time Microsoft made a move like this was this. The same exact move that broke us out of the downtrend. Now, I made a similar move here, right? So again, it can still come back down, but the narrative that's been forcing Microsoft down is dying. For Microsoft, at least. There's an argument to be made that for Microsoft specifically, the bottom could be in. The bottom could be in. I don't know. There's a good argument to be made there, considering it just ran straight vertical through a golden zone and straight vertical through resistance. That is very difficult to do in a sustained downtrend. You know what's going to be the confirmation? Does Microsoft come up and take out 466? If Microsoft comes up and takes out 466, this massive zone of resistance, which was this massive zone of support previously, we're back. Microsoft is back. And then I would be a little bit upset because I didn't buy more. I bought some, so I'll be like, yay. But 4.76 shares of Microsoft ain't cutting it. I wanted 10. And I thought I had more time. That is one thing that is annoying. I'm like, God damn it, I thought I had more time. So we'll see. 466 is the real test. You see Microsoft come up, and listen, it's going to pull back at some point. Whether it's a pullback that looks like this, or whether it's a pullback that slows down, right? Because look at what happened right here, right? Microsoft went vertical, and it didn't particularly pull back in price, but it slowed down. And it slowed down, and it just kind of casually trended upwards, right? Or, some of these other instances, it will go boom, actual pullback, boom, actual pullback. So listen, Microsoft's going to slow down at some point. It has to slow down. The question is, where does it slow down and how does it slow down? Does Microsoft come up, break 466, and then pull back? That's fine. Does it start slow trending upwards as it runs into the topside golden zone, which shouldn't be very far from here? Oh, it's right above us. Okay. Yeah. You know what? Shift that upwards. Shift that downwards. 463. 463 is the number to beat. If Microsoft breaks above 463, not only does it enter into the golden zone, it also clears above its previous high and officially confirms that this downtrend is halfway broken. Because now you got, of course, the higher high, right? And then you just need a higher low. So Microsoft might be back, man. Specifically, I'm not talking about AMD. I'm not talking about Micron. I'm not talking about NVIDIA. I'm not even talking about SPY. I'm talking about Microsoft specifically. But let's say Microsoft comes up and it gets rejected harshly off of 463. I'm not sure it looks like that. Like, I'm not sure we have this same sort of move. But in theory, it definitely could start coming back down to sub 400 again. So that's why it's so important to watch what happens at 463. Microsoft is not a buy right now. Anyone trying to buy Microsoft in the short term, listen, midterm, long term, I'm sure Microsoft will be fine. And think about it, right? At the end of the day, Microsoft is down 16, 17.5% from its all-time high. There's never been a time in history where buying Microsoft 17.5% down from its all-time high was a bad thing if you waited 3 or 4 years. I don't think. So yeah, long-term, if you want to buy, obviously. I'm not a financial advisor. Do what you want anyway. Don't listen to me. I'm just a random dude in a purple room. But if we're talking like short-term, Microsoft sitting directly below a massive zone of resistance and a golden zone like this makes it not a buy, obviously. It's like obviously not a buy in this sort of moment. So that's why when I look at it, it's more of a hold. It is a very clear hold. It's like one of the clearest holds possible. I'm holding to see how it interacts with this golden zone. Does it get rejected? Does it break through first, set the higher high, then get rejected? Does it break through first, come back, and then start trending upwards? Like, what happens next? This is a wait and see moment for Microsoft because whatever happens next is going to have a big implication. It's going to have a big implication. And I think we just fully completed the cup and handle pattern, right? It perfectly aligns. All of the stars align with 463. You had this cup and handle pattern, or some people call it an Adam and Eve, which I see it, right? Call it an Adam and Eve, a cup and handle. Your breakout target's 463. Your golden zone bottoms out at 463. Your previous high is at 463. Everything is at like 463. I'm not buying Microsoft directly under 463 unless it's just a normal dollar cost average like I do on a daily basis right now. Hell, if anything, I'd probably short it. I obviously wouldn't do that. But if I had to make a move, I'd probably short before I long because, again, there is a massive seller zone right there. Google. Google is doing okay. I think the market is reasonably punishing Google right now. That looks like a damn blood diamond, though. Does it? Oof. Okay. Bit of a warning. This just started forming. Google did just give us a blood diamond. Yeah. Very clearly a blood diamond. These are one of your higher hitting reversal structures. These have a rather high strike ratio. Usually what happens when you see a blood diamond is a capitulation. So I would be incredibly careful with Google. It has to come up and clear that previous high at 342 to invalidate it. It's the only way to invalidate it. That's why they're so high striking. Be very, very careful. I don't mess around with blood diamonds. Which one did I see a blood diamond on? Was that NVIDIA? Was it NVIDIA, that blood diamond? No. Micron? No. SPY? Which one blood diamond? I saw it and I told y'all about it. It was SanDisk. Yeah, right. Of course. Because look at it. It blood diamond. And I was like, oh shit. You remember, we had this drawn up and I was warning people. I'm like, hey, that ain't good. That ain't good. You can't mess around with a blood diamond, folks. You can't mess around with these bad boys. You can't mess around with these because their breakdowns are nasty. They're just very hard to they're very, very, very hard to invalidate. And you kind of had a 3 kings as well. 3 kings, blood diamond, top of a run, overextended. Why didn't I short that? What was I looking at? That's a clear short for me. I guess I just didn't feel like it. Damn, I wish I would have. I would have too. Dang it. Because what is, yeah, that's 100% gain on a 3x leverage. But yeah, you're going to want to be real careful right now. Real careful. You know the saving grace, though? The saving grace is that it's not coming at the top of a move. Like, it's not like we're seeing this happening way up here. You know, like say if Google did this, then it started blood diamond. That's way more nerve-wracking. We're kind of at the bottom of a move still, which means that I guess even if it does capitulate, it could be like boom and then boom, right? So maybe you create some sort of like macro cup and handle off the capitulation. But again, just be very careful with Google right now. Yeah, that's the only way I can describe this. You got it. You can't mess around with blood diamonds, dog. You can't mess around with them because the only way to invalidate it again is to break through that top side. It's way more likely that you capitulate. It's like dramatic 90% chance, 85% chance. So please be very careful with Google for now, especially as we go into Amazon's. Because I'm telling you, I think if Amazon decides not to raise guidance, people might take all of it out on Google. They might say, you're the problem, which is stupid, but they would. I could see that, and I could see it pulling back. I don't know, but let's just be careful, all right? The terms for trading kill me sometimes, facts. No, it's not the same thing as a Head and Shoulders. A Head and Shoulders is this. They do look very similar. A blood diamond, though, looks more like, it looks more like, how do you even do it? Like this. This is more of what a blood diamond looks like. So it's like you're not setting equivalent lows. You're dropping down and recovering up, then dropping down and recovering up, and it creates this diamond shape. They're so suspect. They're so suspect. You got to be so careful with these. Let's look at Amazon now that. So Amazon's up 4.5% on the day. Bounced off the golden zone, right? No. Wait. Why is my chart changing on the, what is that? Turn that off. What is that? There we go. Okay. What is, I don't even know what that button does. What the hell was that? Whatever. So Amazon is in this is a very peculiar situation that it's in right now. Hey, that's actually a good point. I like the stream. Don't forget to like. Hey guys, it really does help. I know it's so annoying when people who are streaming say like, can you guys like the video? It just does. It's just objective. It tangibly does. If you like the video, YouTube sends it to more people to come join in. It's just what happens. And that supports the channel a lot. So thank you so much if you could like, guys. Amazon's in a very peculiar spot right now. What they say today is likely going. I think by the end of this week, I think by the end of the day tomorrow, Amazon has come up and interacted with one of these based on what they say today, which, how big of a move is that? Further 6% to the top side or 10% to the bottom side. I could see that. I could see Amazon coming back and grabbing one of these levels based on what they say today. My gut would say, if I had to give it like a gut feeling, my gut feeling would say that if they raise their CapEx, they're going to roll over and Microsoft is going to pump. And I think Amazon starts rolling over back to 215 as people rotate out of it into Microsoft. If they maintain CapEx guidance, I could see them running to trend and maybe breaking it just like Microsoft. Now, that's the predictable thing. The market will always be very unpredictable, but it's going to be interesting to watch one way or another. It's going to be interesting to watch one way or another, okay? Let me see something. What time? Okay. Got it. So yeah, we're going to be looking. Okay, so we have about 15 minutes until the earnings drop. So yeah, going to be very, very important. Very important we watch that, okay? Apple going into theirs. I've made my position with Apple pretty clear. Apple can easily continue to chug up from here. I'm just not interested in it right now. Apple showing very clear signs of divergence. Apple is very overextended. Every metric that tells me that Apple's going to pull back soon is flashing. It might take a week or two, right? Like it could continue like this for a few weeks, just like it did here. But I do think eventually it's going to erase some of those gains. So I'm like I'm just super good on Apple. It's just not one that I would even remotely consider buying at these levels. Not even a little bit, to be honest. It's done a great job. Don't get me wrong. Like, it's broken out, come back down, flip these previous seller zones into buyer zones, use the buyer zone to rally to the top side, clear through previous all-time highs. I mean, it's done a great job. Kudos to Apple. Awesome work. But now that we're up here, you can clearly tell we're at an extension zone. I don't even think I need to map it out, but I can look like, yeah. You know how whenever you break through the golden zone, we're looking for the blue line to the green line? That's exactly where Apple is right now. Maybe it extends up to 373, but to me, it's like it's way too risky to be buying Apple at these levels in terms of price action. And then whenever you look at, I mean, shit, dude. Ugh. 1 second. There we go. Yeah, man. We're talking about 40. Yeah, I can't rationalize. I can't rationalize that at all. 34.41 on 2027 forward PE. Yeah, I'm good on that. So I'm curious to see what happens, but there's no chance in hell I buy Apple anywhere close to this. All right, let's talk about some numbers then. All right, I think I have a presentation for you all. Yeah, I do. Okay, perfect. All right, let's go through some numbers. Let's go through some numbers ahead of this Amazon and Apple earnings, okay? So when it comes to Amazon, numbers to beat: 196 billion revenue expected, which is a 17% growth. EPS is looking to come in at $1.82. Now remember, we're talking about $1.82, but there is going to be those paper gains from all these private investments going up. That's not real earnings. We're talking about earnings from operations, all right? AWS, this is the big one. I'm going to go into it a little bit more in a second. We're looking for 40.5 billion. We're looking for AWS, which is their cloud platform, to climb or compute 31%. 31% is what we're looking for. And I'm telling you, you don't want AWS coming in lower than that. The market will not like that for Amazon. If you're an Amazon holder, like I am, we're looking for 40 billion. 40 billion or higher. Okay. We're looking for a 40 billion or higher. Now, the reason why I say that is because, again, AWS is Amazon's cloud business. So it's basically, you know how yesterday we were talking about Microsoft's Azure? It's the same thing. Like AWS is the bigger version of Azure, basically. So over the last 3 quarters, AWS has consistently grown 20%, 24%, 28%. And that 28% last quarter was its fastest in 15 quarters. That was the fastest velocity that it's grown. And so now Wall Street wants it to continue to maintain some of that upwards trajectory with a 31% growth tonight. Now, Bank of America, they're looking at 33%. I saw one other estimate from, was it JP Morgan? I don't remember. One of them said 32%. 31% seems to be general consensus. You're looking for that. That equates to about $40.5 billion in revenue from AWS. I'm telling you, you do not want to see it miss. You don't want to see it miss. It could come bringing all this shit back to earth. Okay. Okay. Like I'm telling you. I'm telling you. Now, you know what will be very interesting as well? I had this written down in my notes. We're going to watch the backlog too. We're going to watch the backlog too because a lot of these companies are like, their backlog is going crazy and people don't even seem to be talking about it. I think that's very important. And we don't have enough time to really dive into that right now because the earnings drop in potentially 10 minutes, but still very important to watch. So when it comes to Amazon, $196.82 EPS, the big boy, 40.5 billion for AWS. Okay. Now, in addition to that, we're looking to see what they say about CapEx. So Amazon has guided about $200 billion for the year, and they actually held that number last quarter. Okay. Now, Wall Street has already drifted up to roughly $207 billion. So Wall Street believes that they are going to raise it by a little bit. Okay. The question at this point is, do they? Microsoft decided not to. Microsoft was one of the very first ones to say, no. Okay. No, we're not going into this perpetual cycle of constantly raising CapEx. What does Amazon do? Maybe they follow like what they did last quarter. Maybe they just keep it the same. And if they do that, I could see a world, man. I could see a world in which Amazon's price follows somewhat behind what Microsoft did. It's going to be very important. Ain't it crazy how, you know what I just thought about? Ain't it crazy? What is that? Weird. Oh, I hate that. There we go. Okay, there we go. Ain't it crazy how Microsoft didn't put their CapEx guidance in the report? They waited to say it on the call. That's how you know it was intentional. I didn't even think about that until just now. But it's going to be very important. 200 billion. Wall Street's expecting 207 billion. Let's see what happens. Hey, look at that fella. That was weird. Oh, yeah. Okay, I was about to say I thought I double dipped on that. Okay. Now, when it comes to Apple, Apple's a different story. Remember, the reason why Apple's so important is because Apple is the biggest company in the world. So many hedge funds are in Apple. So much is tied to Apple. Nearly $5 trillion in market cap. Biggest company in the world right now. Overtook NVIDIA. Okay. That's why they're so damn important. Now, they're not getting deep into this whole CapEx thing, but because they are so big and important, they're going to be impactful to the risk on or risk off nature of the market anyway. Okay. So when it comes to them, this is what we're looking for. All right. When it comes to them, this is what we're looking for. $108.9 billion in revenue at $1.89 in earnings per share. Is that the same as that? No, close though. $1.89 in earnings per share. That's what we're looking for. Very simple. And that's the fun part about Apple is you don't really need to get super deep into the weeds of CapEx and all this sort of stuff. Like their CapEx is actually falling 3 quarters in a row while everyone else is doubled. No one just cares because Apple, it's not the same thing. They're not in this hyperscaling department. They're not doing the whole hyperscaling thing. Apple's kind of just minding their business. What is their CapEx? Yeah, 12 billion, which I'm like, I don't got 12 billion, but it's not much. So Apple's not going to be as important. And that's the reason why if their earnings calls are at the same time, I am going to be tuning into Amazon instead of Apple, but it is going to be important to watch. Biggest company in the world. Okay. Biggest company in the world. Let's see. Yep. All right, and we went over all this already. So that's what we're looking for. Earnings are going to drop in the next 10 minutes or so. Market closes in 10 minutes at least, so it should be sometime after that. I don't remember if Apple and Amazon are good about releasing it immediately or if it takes a while. But we'll be here. We'll stay updated and kind of see what they say. I will get a card ready. There we go. So I'm getting that ready. And we will we'll kind of see what happens. We'll see how it comes in at. I'm a little nervous. I'm a little bit nervous. Am I the only one here who's just a little bit nervous? And the reason I'm a little nervous, maybe just excited, is because if this goes if the market takes whatever happens next the right way, we genuinely could see like Microsoft back, for example. Microsoft, this pullback that it's been seeing could be back, and we could be looking at gains. I mean, like Microsoft rallying back to topside golden zone is a 12% move from here. All-time high is a 21% move. If I can get a gain of 40%, 40% on Microsoft in a few weeks, I mean, that'd be nuts. That's the sort of stuff that can open up the door for a Micron to really break back out. I mean, that could be the sort of stuff to allow Micron to push back through the golden zone out of this right thing. And like, we could be back and the excitement could be back. If Wall Street takes what happens next negatively, though, all this joy and excitement that's been in the market today, it's just going to get snatched. It's going to get snatched right from in front of you. And it happened before. I mean, we saw something similar happen today with Kospi. Look, it was up 10% at one point. It was up, about 9% before it got snatched all the way back down, fell that 9%, and then went negative on the day. So it can't just get snatched from you. And you can continue on in that same downward trajectory that you were on. So that's why I'm kind of like, that's why I'm amped about whatever happens next. It's going to be wild, man. It's going to be big. So the game plan is this. We're going to hang out for the next 5 minutes. We're going to hang out for the next 5 minutes. And then we are going to go into earnings in a few minutes here. And then we're going to listen into their earnings call in about an hour and 5 minutes. And then we'll do some post-market analysis. And then, we'll call it a day there. Why does Microsoft affect Micron so much? Because Microsoft's a hyperscaler, and hyperscalers spend money on semis. All right. Okay, let me add a couple timestamps in. Let me see something real quick. What time did I start looking at this? I would assume that was like 15 minutes ago or so. Earnings drop 4 minutes, folks. Buckle up. Buckle up. Gonna be a big one. Say it about 40 minutes in. I'm adding timestamps right now. Give me a sec. Yeah, like that thing. Like that thing. Will you make a video about SanDisk earnings? When is it? August 5th? Yeah, probably so. It's so fun. But you kind of just, it's hard to tune out. It's hard to like stop once you start. I'm super over leveraged on AMD and SoFi. Some days I fly and some days I die. Last minute memory shorts, here they come. Yep. Let's see. Oh snap. So Google down is bashing. Why would that be the case? Wednesday. Yeah, I'll be home on Wednesday. Does any company do earnings during market opening hours? No. Like, when the market opens, before the market opens? Yes. When the market is open? No, not usually. Hey, in the meantime, folks, I had a great day. That's super nice. Thank you. Yeah, I had a great day. In the meantime, folks, I will remind you all of the trading that I personally do is over on Liquid. Feel free to go check that out. This is one of the absolute best platforms in the world to trade on. So many different places and countries can access it. It's super easy. You can load it up and start trading on it. You get bonuses and reward. It's amazing. Check out the link down below. I've been trading with this for a couple months. I really like it. If you use my link, they are actually going to give you a 10% discount on your fees as well. Okay, so check out that link, the Liquid, in the description below. And if you do want to get the toolkit, don't forget the toolkit's available for you as well. Down there, you can learn more about it here. Okay, that's what I use whenever I'm doing my technical analysis and stuff. Let's go. Let's see what happens. Hi from New Zealand. New Zealand. Love your channel, mate. Appreciate it, G. Thank you. Liquid. So Liquid is actually where I trade. So on TradingView, I do my technical analysis, and you could technically connect your TradingView to a trading brokerage and trade. I personally just trade in general on Liquid. This is the platform that I actually execute my trades on, as you can see. It's like the SanDisk trade that we did and stuff, that was on Liquid. Because I just like the fact that it's not a full blown like crazy brokerage with all the bells and whistles and all this stuff. It's literally made for trading. They also have some cool features like co-invest. I'm going to make a video about that pretty soon. But yeah, coming soon, man. What a day. What a damn day, dude. You bet, you bet, you bet, you bet, you bet. Appreciate you, homie. Yeah, I have a promo code for Liquid. It's just Tyler Hill. The easiest way to do it though is just go to the link in my description, just click it. And if you click on that link and sign up, it'll automatically do it. So you make sure you get your bonuses. If you just sign up on your own, you won't get the bonuses. Okay. Tyler, are you still laughing? Yeah, I mean, shoot, I'm freaking laughing to the bank today. Bah, I'm just joking. Still down on the month, lol. But yeah, feels good though, man. Feels good. All right, let's get going. Let's get going. Let's see how this goes. All right, lock in. It's time to fucking dial in. Excuse my language. I forgot that I'm on a channel where I try not to curse. My bad. That's on me. Let's get serious. Time to get serious, boys. Oh, yeah. Nothing yet. For Amazon, I don't know if they're going to release it the second. Ooh. Oh, here we go. All right. Oh, wait. When did this one drop? No, this is the old one. Okay, we're still waiting. Still waiting. Nothing wrong with waiting. Let me go check the SEC website just in case it popped up. It's up. Why is it not loading on there? You know what I hate? I hate when they don't update their investor relations page. It's updated here. Just put it here. It's where you should put it. Here, let me I have a couple options here while we're waiting. Amazon earnings. Wow. Beat. Amazon is a beat. It is a big ass beat on earnings per share, but that's like it's paper. Where are we at with the AW? Cool. Whoa. Holy shit. Am I reading this right? Hold on, give me a second. No, okay. I was about wait. No, yeah, I am reading this right. I'm pretty sure Amazon just came out with AWS and net sales excluding for 37% on AWS. What the hell? Hold on. Whoa. Big one. The SEC website's literally not loading. Here we go. Amazon. Yo, everything's running so slow. This is so crazy. Whoa, what is Amazon stock doing right now? It has to be up. Oh yeah, we're sending, bro. Amazon, I told you. I fucking told you. I told you Amazon's coming for that 250. Look at this. You remember I told you, depending on what they say, we're either going to say it pushing to the top line or we're going to see it come back. Told you. Told you. Amazon smashes, dude. Wow. Wow. Wow, wow, wow. Where are they grabbing it from? I'm looking on the investor relations. The SEC website's literally just not loading, which is so annoying. Look, everything's just not. Oh, here we go. Here we go. Bang. All right. Let's see. Here, I'm also going to download this and plug it in so we get the card. Holy shit. 37 freaking percent, boys. Whoa. Okay. Net sales increased 20% to $200.6 billion in the second quarter, compared with $167 billion in the second quarter 2025. AW 37% year over year to $42.2 billion, bro. Holy shit. Holy shit. $42 billion, dude. Analysts weren't even close. $1.5 billion beat, a 6% beat on AWS. What is like Azure is smashing, AWS is smashing. How could the market doubt the AI trade now? Operating income up 27.5 billion year over year. What? What was EPS? How's free cash flow decreased to an outflow of 7 billion? Right, makes sense. Look at this. Look at this. Look at it. Yo, I gotta change the title of this video. Hold on. Holy shit, dude. AWS is booming, growing 36.7% year over year in Q2. Our fastest growth in 18 quarters, bro. That's insane. And our AI and chips business each eclipsed run rates for more than $25 billion. In stores, we again set record delivery speeds for Prime members in the first half of the year. Over 40% more items delivered same day or overnight, with grocery and everyday essentials growing meaningfully faster than the rest of the business. And I love this petty ass and advertising had another strong quarter with 26% year over year growth. That's a lot to be excited about, and we have much more coming for the customers in the second half of the year and beyond. What is going on this week, bro? Holy shit. Yo, this is this shit's obnoxious, man. Like 10% day on Amazon, bro. My God, dude. This is a nuts release. Here's the card. Revenue, $200.6 billion, 20% year over year, beats expectations by $3.1 billion. EPS comes in at $5.75, but remember, that's a paper gain, Anthropic and all that nonsense. EPS ex Anthropic comes in at $1.95, beating analyst expectations at $1.82. AWS revenue comes in at $42 billion, beating expectations of $40.5 billion. AWS growth putting it at 37% compared to analysts of 31%. Margin at 30. Look at this shit. $39.4 billion or 39.4% margin compared to expectations of 33.8%. That's like what, a 12-15% beat on margin. That means they're making more money at revenue speeds and it's not costing them money. How do you buy Meta instead of Amazon? And I'm not talking bad about Meta. I'm saying that's why Meta's falling. I don't know if it's falling right now, but I can only guess that it is. Yeah. Like, how do you choose? They're making more money than ever, and their margins are growing. Operating income at $27.5 billion, which is way higher than their 20 to 24 billion guide. Now, look, their free cash flow is getting shit on, which is the reason why Amazon's down in the first place. People don't like the fact that they're going negative free cash flow on CapEx. Everyone knows that. But this is a crazy report, bro. This is a crazy report. What did they say about... There's just so much to go through there. Here we go. 22.5 to 26 billion compared to a 17. Fuck's sake. I don't think they spoke about. I don't think they included. Yeah, they didn't update CapEx. I don't think. Yeah, they didn't mention CapEx. So now we have to listen. Now we have to listen to the call, obviously. Wow. The only way to, that is in, we're talking about, and listen, is this the craziest numbers we've ever seen before? Kind of. But no, like, but we're talking about Amazon. We're talking about the biggest company. Like, what are they, 6th? 5th biggest company in the world. Seeing operating income pushing like 15% higher than forward guidance. We're seeing revenue beating. Dude, this shit is ridiculous. What is going on this week, bro? There's no, like, this is so justified. It's so justified. And it's good for the AI trade as well. Like, it's good for your semis. You want to see AWS thriving like that. Because what it means is that the money that they're investing and they're injecting through CapEx is working. It's escalating. It's accelerating. It's a good sign. Like, that's what you want to see. Because it means it's more likely that they're going to continue on. They're going to continue spending more. And it doesn't mean that they're going to raise their guidance, right? What they expected to spend, they might just spend, but still, like, what the hell is going on today? Did we get something from Apple? What happened with Apple? There's not capital expenditure in here. I looked. AWS is booming 36.7% Y over Y in Q2, their fastest growth in 18 quarters, and their AI and chips business each eclipsed run rates for more than $25 billion. That is crazy numbers, man. What's Apple doing? Did Apple release? Did Apple release? Fiscal Q3. No, they haven't dropped yet. Yo. Okay. All right. Apple drops in 27 minutes. Yo. It really comes back to CapEx now. It really comes to CapEx. Like, what do they say about CapEx? Because I'm telling you, if they like crazy raise, this shit's going to the gutter. You're gonna see Amazon come back to like $235. If you're gonna see like 235, 230 probably if they really, really harshly raise CapEx. 207 billion is priced in already. So if they go from 200 to 207, I don't think that's a big deal. But if they don't raise, this could be 10, 15%. Like this might just keep running. We might be looking at a $260 Amazon by the end of the day. Full reversal. We were literally negative on this new position today. If you're an AI investor and you're looking for something good to have happened, this is what you're looking for. It just comes down to what they say about CapEx. That's why everyone's freezing, basically. Like Amazon's running and everything else is freezing to see what they say about it. Treach, are you in here? Treach, are you in here? Yo. Let's look at the dude. I'm like kind of taken aback. It's just the market will almost convince you. The market will almost convince you that it's all dead. And I've told you all, do I think it's dead? No, I knew, but it's like, damn, I wasn't expecting that. I wasn't expecting Azure to smash like that. I wasn't expecting AWS to hit 37. What did I say? Like 30. What was I saying? I don't remember what I said. But it wasn't 37%. I think I was hoping for like 33% or something like that. But my word, that's a monster report. North America segment sales increased 16% year over year. International 15%. AWS segment sales 37%. Operating income increased to $27.5 billion in the second quarter alone, compared with $19.2 billion. We're talking $8 billion operating income in a quarter year over year. AWS segment operating income was $16.6 billion compared with $10.2 billion. We're talking is that a 60% increase year over year? Wow, bro. Right. My word. I mean, I think if depending on what they say I'm telling you, depending on what they say about CapEx, we could be looking at Amazon getting ready to run to like 265, 270 maybe. It's literally sending right now, bro. Dude, the scalers might be back. It's hard to argue it. It really depends. Again, it just comes down to what they're about to say, and we have to wait 43 minutes, bro. It broke it. It broke trend. Amazon has officially broken trend, and it is now coming up to test structure. Or reverse. It broke structure, now it's coming up to test the trend. Your scalers might be back. Oh my goodness, bro. How's Microsoft responding? You're seeing a bit of a reversal. So let me tell you what's happening right now. The reason why you're seeing it pull back a little bit, the reason why you're seeing Microsoft pull back real quick is because people are positioning into Amazon now. So what they're doing is they're seeing Amazon beat this good. And so what they're saying is, oh, snap. Maybe just like Microsoft ran 15%, Amazon's going to run 15%. And you're seeing, and that's a great rotation. Anyone who hit this immediate rotation is doing a good job. You're seeing people rotate from Microsoft into Amazon, and then you'll see it balance out if Amazon does perform well. Like what you may see is Microsoft pull back more, Amazon try to rally a bit from here. So there's going to be a little bit of an imbalance between the two. And then as it stabilizes, you'll find equilibrium. Okay. So if you see Microsoft pulling back right now, it's literally just because people are repositioning, trying to catch that rotation into Amazon before it maybe runs. And most of them are probably too late by now. But Yeah, exactly. Chad Drake, that's a great point. Algorithmic trading is repositioning. Yeah. Wait, what? Tyler read chat. What did I miss? What did I miss? I don't think they announced it yet. I don't think they announced it yet. This is a monster, bro. Operating cash flow increased 33%. These numbers are ridiculous. And you know what's the most exciting part about this? Is that, listen, eventually, these major hyperscalers won't need to be looking at 200, $300 billion a year in CapEx. They won't need to. The only way they would need to is if the ratio scales up that much, right? But my what I'm trying to say is like a lot of this CapEx is upfront cost. Eventually, they will hit like a threshold where they just go into maintenance. And where does that fall to? I have no idea, right? But eventually, these companies like Amazon are going to go into maintenance when it comes to CapEx. And all of this investment that they're doing into CapEx right now, hypothetically, their bet is will turn into improved margins, increased revenue, increased efficiency, increased profitability, obviously, better EPS depending on things, right? Like, depends on how much they're spending, but you get the point. Like, this sort of report shows it's working, at least for now. This sort of report shows that it's working, at least for now. Because you don't have a company like Amazon scaling free cash flow. I mean, scaling operating cash flow 33% on trailing 12 months. Or AWS, bro, 37% year over year. Like you don't see that normally. That's not normal. It means that it's working. Yeah, this is kind of where that's kind of where Meta is now. You know, like Meta's at like what 750 something million, 780 million. Like they're gonna also go to negative. The thing is, a lot of these companies, most of them, if not all of them, will see their free cash flow go negative, and that's the reason why they pulled back. Because Wall Street's like, dude, you're gonna go into negative free cash flow. You're going to know, and you're gonna go into negative free cash flow. You need to be careful. Like, is that a good idea? So you saw them start falling. But now that they're showing this sort of like accelerated growth, if this continues for one or two more quarters, bruh, wild, wild, wild report. How are we looking? I saw somebody saying that SanDisk broke trend. No. No trend break from SanDisk. We're still a ways away from that. AMD still stuck in the zone. Micron still stuck in his golden zone. Microsoft still selling off. Let's see. It's starting to flatline already. So people are already, it seems as if that repositioning could be coming to an end already, but it depends on what Amazon says in terms of CapEx. Meta's actually looking a bit decent right now. That's good to see. Maybe just people in general feeling better about hyperscalers because they're seeing AWS scaling their segmented income. But obviously the big boy here is Amazon. Why would raising CapEx hurt? Because the market doesn't want them to. It literally just comes down to the fact that the market doesn't want them to. It doesn't hurt. Them raising CapEx doesn't hurt semis at all. Actually, it's very good for semis, but the market doesn't want them to. Their golden zone range for Micron, I don't know who just asked that. It sits between $880 and $940. There's a $60 range there. We're in the bottom side of it now. CapEx doesn't hurt semis. It hurts hyperscalers in theory, right? It takes more risk, but CapEx is great for semis. That means that they're paying. I don't know. Maybe we're looking at this different. And exactly. And that's why the market is fine with it. And that's why you see semis performing decently well because they're still going to spend the money. You know what I mean? It's not like, you know what would be bad for semis is if they came out and started cutting it. Like if Microsoft was like, we're going to cut it down by 20 billion. That's bad. That's when you see Micron and all of them, they all crash 20, 30%, almost like immediately. But that's not happening. Are we being a little bit like conspiracy theorists right now? Is that what's going on? Is that what's going on with this? Is that kind of yeah? Amazon up 9.29. Yeah, dude. Yeah, dude. I keep underestimating these things. You remember how I said at the end of the day we could be looking at an Amazon right here? Yeah, Amazon had better thoughts. Amazon had better thoughts. It just smashed through it. And remember what I said about Microsoft? That's hard to do in a downtrend. You're not going to see them coming up and blowing through a golden zone and blowing through a trend almost immediately. Almost immediately. Like in a natural downtrend, you're not going to see that. This is the sort of thing that'll spark up an uptrend. Now, listen, it doesn't mean that it can't pull back first. It can absolutely pull back first. These sorts of moves give the market confidence that it can trend upwards in general. In these moments, no one believes that a recovery is real. In these sorts of moments, no one believes that a recovery is real. This is the sort of candle, if it maintains, if it sustains, that can lead the market to believe it's real, even if it pulls back a little bit, right? As people rotate out. That's why it's so important. And if you have an Amazon coming up and breaking through its previous high, like, look, there is still that golden zone towards the top side. So you need to be careful. It's like right above us. No, we're at it. Hold on, pause. Everything stop. Yeah, we're at it right now, and Amazon just got rejected off of it. So, like, you obviously need to be incredibly careful with Amazon right now. Amazon is not a buy now, by the way. For everyone who's asking and thinking it, no, Amazon is not a buy now. You don't buy directly under a golden zone. That's just dangerous for no reason whatsoever. You can. I'm not telling you what to do. If you're asking me if I would buy right now, if I had a new position, no. Because now's the danger, right? This is where the danger is at. So the question is, does Amazon come up and break through this? And depending on what they say about CapEx, I could see it happening. And that's a sign that the trend is changing. And then what it needs to do, it sets a new high. Maybe it comes back down, sets a higher low, and boom, now just like that, you're in an uptrend. Just like that, you're in an uptrend. The trend is your friend. You got to watch the trend. And I mean, on all accounts, Amazon is trying to break it now. I am still more bullish on Microsoft than Amazon in general, but this did a damn good job at closing that gap a bit. No, Apple comes out in 4 minutes. And then we are going to and then yeah, I'm tuning into Amazon's earnings call. I couldn't really care less what they say about Apple. Now after seeing this with Amazon, no, we're tuning into Amazon, obviously. Yeah, that's crazy work. Hey guys, can y'all do me a favor real quick? There's 514 of you in here real quick. Please just do me a favor. If you found value in me keeping you up to date on what's going on, just like it. Just like the live stream. I know it's aggravating. I ask it like once an hour. It really helps. More people will see it. That's why there's 500 of you in here now, because it recommends it out to more people if you just like it, because YouTube's like, oh, people like this, give it to more people. Then they run ads. They make money. It's great for everyone. Just like it, please. Anyway, back to the show. Dude, yeah. It's gonna be crazy. All right, so we have Apple coming out in 3 minutes. Releasing at 4:30 Eastern, then Amazon, God damn it, Amazon call at 5 p.m. Eastern. Yo, DH Wisdom is such a goat, bro. I feel like I see DHA literally every single stream. DHA, we got to get you in TH Cap, dude. Where are you at? Freak, that's why you're my bestie. Yeah, I do too. I do too. If you like it, I do too. Because more people join, it plays ads, and then I get paid AdSense on every view. I definitely make more if you guys like it. But it's like it's kind of small. It's like a couple cents for every 10 views or something. Yo, what the hell, bro? What the hell is going on this week? I feel like this has been one of the wild. You remember? You remember? Do you remember on Sunday when I said this is going to be one of the wildest weeks that you've seen? And everybody in the comments was like, Tyler, it's not going to be wild. You always say it's going to be a wild week. Crazy, bro. I can't stop looking at these numbers, bro. It's just, it's the 37% AWS growth is great. Don't get me wrong. It's the margin that's getting me. Because how many companies have we seen over the last 2 quarters ish, like the last quarter, increase revenue, but margins are getting cut down because of just the environment we're in right now? It's pretty frequent, right? Even think about like Robinhood. Robinhood did great at increasing revenue, but their margins aren't great. Or it's same thing with SoFi, right? Same thing with Meta. But in Meta, there's nuance, the lawsuit, whatever. So how many times, but how often is that? And for them to, their margin is growing and their revenue is growing. It's just ridiculous, bro. Now I see some people talking like, oh my God, their EPS is 575. Please remember, they are showing paper gains for their Anthropic investment going up in value. Okay. That don't count. That's not operating income. Operating EPS was $1.95 versus $1.85 expected. That's still great, but it's not a 5x or a 3x. That's not. Don't lean on that. Okay. Let's go, baby. Let's go, baby. I'm in such a damn good mood, man. Doesn't mean it's gonna last forever, but freaking it's here now. Here now, baby. Oh, what is this? No. Almost got me there. All right, let's see. Okay, Apple comes in. Revenue 109. Here, you know what? Let me get my, I want to get the card going. I want to get my card going. I bet it's my cache. I bet my cache is the reason why this shit never updates. Sorry, I'm cursing so much. I'm just drinking a lot of caffeine, so I get a little amped up. I'll try to pull it back a bit. That's on me, folks. Because this is the one from, what's it called? Yeah, this is the one from April. Because it's fiscal year for Apple, right? Apple. Let's see if I go to a new. No, it's not going to connect. It's just so annoying. And I could go to the SEC website, but every time they release it, the SEC website just doesn't load for me. It's so annoying. All right, let's just see what they said. I'll go into it. EPS is $2.02 versus $1.89 estimate. Is that what we had? Did we have $1.89? Yeah, $1.89. So we got a beat there. Revenue comes in 109.4 versus 108.9. Yep. Okay, so we got a bit of a beat there. That's not a big beat, I don't think, though. What is that? What's that number? That's a 7. I mean, that's a decent amount. EPS 29% year over year. Revenue 16% year over year. Revenue down 2% quarter over quarter. Okay, it's decent. It's decent. You know, like it's cool. How's Apple? Mm. Mm. Hmm. So Apple's getting a little bit of a beat down right now. Why would Apple be selling off? Buy the rumor, sell the news. Everyone kind of expected it. Everyone kind of figured Apple was going to run. Probably. It's been getting overextended, been running real hard. I mean, the thing is literally up. How much is this thing up? From June 25th to now, I mean, it ran 25%. Apple was kind of like the anti-hyperscaler play. But now that hyperscalers are running, you're seeing people rotate back out. This was the exact reason I didn't add Apple. It's the exact reason I didn't add Apple. I only added Google, Amazon, and Microsoft. I also didn't add Meta for a very similar reason. Yeah, I think this was just priced in. It seems like it's a pretty solid report. I wish they would update their investor relations page. I don't want to go to the SEC website because it crashes my computer. Let's just go do it. There we go. Okay. I want to download it too real quick. I'm going to get a little card pulled up for you guys. You know, I like to get our little cards. Give me the hey, somebody help me out here. How do you how would I go about downloading it off this thing right here? Not this. Not that either. There's just never a clear download button. Can I just download this? I don't know. Okay. There we go. Today, Apple is proud to report our strongest June quarter ever with double-digit revenue growth across iPhone, Mac, and services and in every geographic segment. Tim Cook. Hey, this is Tim Cook. Yo, this is Tim Cook's last. Isn't this his last quarter as CEO? Am I tripping? Yeah. Damn, that's crazy. So John Turnus is taking over from Tim Cook. That's wild. How long was he 15 years, man. That's crazy work. Congrats for him. That's cool stuff. We are very pleased with our record business performance during the quarter, which set new June quarter records for both EPS and operating cash flow. Our installed base of active devices also reached a new all-time high across all major product categories and geographic segments. Apple's board of directors has declared a cash dividend of 27 cents per share of the company's common stock. The dividend is payable, et cetera, et cetera. Cool, man. Where are we at in terms of, this is what I'm looking for. Wow. Damn. Net sales. Total net sales 109 billion to 94 billion. 9 months ended. Damn, man. That's a good report, bro. That's a good report. That's honestly good for Apple. The reason why I think Apple's pulling back though is I think the market expected this. I think like Apple is just, when you're the biggest company in the world and you're at an all-time high, it's almost as if there's nothing they could have possibly done. Like there's nothing they could have possibly done today to avoid this. Yeah. It's not a terrible crash. I mean, if you just zoom out, it's really not pulling back that much. I just don't think there's anything that Apple could have done today to avoid a pullback because the market was pricing this in already. It was pricing in perfection. Damn, where was I at? Oh, there we go. Where, you know what, people, you know, one thing I do like about Apple, though, on the other side of the CapEx thing, I do like the fact that they're just sitting on so much, bro. Oh my God, they're sitting on so many assets, yo. Cash and cash equivalents sitting on 39.5 billion. Like, I do like that. Especially when you start to see some of the other ones going negative. It's cool. Wow, man. It's actually a really good report. I'm sorry I'm being quiet. I'm just trying to read through it all really quickly to give you feedback. They're just making so much money, bro. Cash generated like operating income at 116 billion. It's just a ton, like it's just crazy how much money they make. Yeah. Increase in cash and cash equivalents 3.6 billion. Cash equivalents, and restricted cash and cash equivalents ending balances 39.5 billion. Supplemental cash flow disclosure 26 billion. It's just crazy how much money they make. They make so much damn money. It's insane. Like they just make a lot, and it's still a good company. You know, it's still a good company. I know I was talking earlier, like I see no reason to buy them. This is exactly why. It's just because it's kind of one of those situations to where it's like it's just priced for this already. Look at Apple in the last 5 years, man. Like they're going against the AI trade. That's what they're doing. They are going against the AI trade. And I do think that's going to suit them well because there's a lot of investors out there who don't want to be a part of the whole AI thing. They don't want to be a part of the whole, CapEx thing. They don't want to be invested in companies that are going negative free cash flow, which is crazy for these companies, by the way. I think we're getting desensitized to this. That's crazy. The fact that Meta, negative FCF next quarter, probably, Amazon, negative free cash flow, they're all going to go negative at some point. That's nuts. That's nuts that the Mag 7 are all going negative, except for a few. So the fact that, and obviously I'm not talking about like NVIDIA, whatever, there are going to be people out there who want exposure to the Mag 7 who don't want to be involved in the AI trade, and Apple will be there. The problem is if Amazon, Google, Microsoft, if they're all right about this bet that they're making on Amazon, you're just going to end up seeing Apple start losing its dominance. You're just going to, if Amazon, for example, or Microsoft is right, you're going to see them start losing dominance. It's not going to be hard for Microsoft to catch Apple if they're right. It's not going to be hard for Amazon to catch, 4 trillion, 4.5 trillion if they're right. It's not going to be difficult. And I think you're going to see Apple start losing its dominance. I think it's always going to be up here because there's always, they just make a lot of money, right? Screw the AI thing for a second. They're just a good company. It's just like, if Alphabet, if Microsoft, if Amazon, if they're right about this, I just feel like Apple's going to fall behind. And that's the reason why I sold Apple. I actually had Apple. I sold Apple at a pretty decent gain just because I was like, they're not really playing the game that I want to play personally. And I still have exposure to them. I mean, let's be real, right? Let's be real. 6.5% of VOO. I have $415,000. So 6 point. I have a. Oh, that's not what I meant to do. Hold on. I have basically $27,000 of exposure to Apple, right? So although it's not directly invested in Apple, I'm invested in Apple. I have $27,000 in Apple. I have more exposure to Apple in the public portfolio than I have in the new hyperscaler portfolio in general. So I'm cheering for Apple. Don't get me wrong. I want to see Apple win. It's just for me, it's just like, I don't know. They're not playing the game. They're not playing the game that I want to play. And it's why you're seeing Apple crashing. I mean, it's why you're seeing Apple down. Who the frick would have thought that by the end of the week, we would see hyperscalers back up and Apple and Meta getting smoked? Wow, bro. And then so I want everyone to be careful as well, because it does look like if Apple comes down, and it takes out that low, its uptrend is officially over. It's short-term uptrend. So the run that it's been on from June 25th, whenever we saw the peak for like Micron and all them, to now, this uptrend is over because it will have officially set a new lower low. And you remember just earlier I was telling you that HCI was getting dumb high, bro. Sentiment Toolkit. What was our HCI up here? Someone probably knows. Yeah. I mean, we were at 3 here. We were at 4.3 here. So we had divergence from this high to this high. The HCI was falling, and that's called divergence. And that means that some sort of pullback can be on the way. We also knew that there was a seller zone at 349. We didn't even get there. We missed it by $5. So I'm not going to say the run is over for Apple, but it's definitely in a much more precarious. Is precarious the word I'm looking for? I don't even know if I know what that word means, but it's in a much more precarious spot right now. I have to know now. Damn it. Sorry, guys. Precarious. Yeah. Okay, sick. Yeah, it's in a precarious spot right now. Okay, so you're definitely going to want to be careful with an Apple. I wouldn't fade the trade. I don't think I'd fade the trade right now. I don't think I'd fade the Amazon, Microsoft. If any of them have a shot right now at really returning, it's gonna be these ones. It really just depends on what Amazon's about to say about CapEx. If they make the wrong move here and they report a big increase in CapEx, I think you're gonna get rejected off this golden zone, and you're probably gonna see Amazon coming back down to like 240 or lower. I think Amazon comes back in here somewhere. If not, that could give it the legs it needs to push into that golden zone. Is Microsoft still rotating? No. On a 3-wave downward. So definitely correcting a bit, but this is perfectly reasonable, right? People rotating from, oh, look at that Head and Shoulders. Hey, look at this. Look at this, friends. Look how fun this is. Now that I zoomed in, it's not as clear. Never mind. It's a little bit of one. It's like a bit of a janky one. It's like your one cousin who just don't look right. Is that just me? Just kidding. I don't have any cousins. Just kidding. I also have cousins. But yeah, like you get the little Bart Simpson up here. Little Bart Simpson. Get your little Bart Simpson waving hello. Sorry. All right, there we go. Anyway, all right, my bad. Okay, so yeah. It makes sense as to why you are going to see Microsoft kind of rotate a little bit here. Because people are going to look at Amazon and go, if Amazon doesn't raise their CapEx, Amazon might follow right behind Microsoft and take off 15% tomorrow. And so what you're seeing is you're seeing people sell out of Microsoft and go take position in Amazon. Look at the timing. Microsoft flattens out here between 1620. And at the same time, if we look at Amazon, that's exactly when this one started to accumulate. You get the pullback, you get that one more liquidity grab, then you get the run. So as soon as Microsoft starts pulling back, Amazon starts taking off. That's a repositioning because people are trying to catch the scoop. Maybe some people grabbed into Microsoft here, rode the wave up. Now they're taking their profits, rotating into Amazon, going to try to ride that wave up. Or maybe they did already, obviously. They're going to listen into the call in 15 minutes and go, all right, in 15 minutes, I'll kind of see what I'm doing. Maybe they take profit if they don't raise, or if they do raise. Maybe if they don't raise, they let it ride a little bit. Maybe Microsoft goes a little quiet for the next 24 hours and Amazon kind of takes a bit of it. Going into next week, they maybe equal out a bit. That sort of thing. Volume on Microsoft is insane at 109 million. Who just said that? Shout out Mark Babel. Yeah. Yeah. Oh my God. Look at that, dude. Sure enough. 109.5 million volume. And that's what you want to see. When you have Microsoft breaking up and breaking out, and it's backed with big volume, you know what that means? Sellers tried to stop this from happening. They tried to stop this pump from happening. They just had no success. Microsoft just pushed through. Sellers stepped in at the golden zone. They stepped in at the trend. Didn't matter. Microsoft pushed strong and broke through some of those structures. Very good, man. Very good for them. What's Amazon looking like? Yeah, Amazon has Amazon's is backed out, is backed by volume as well. And this is going to be a bit of a skewed one. Amazon's volume is 93. Yo, Mark, Amazon's volume is 93.6 million. And you got to think about it. Microsoft is the one that had the whole data run. Amazon, what was this up here? How much was this? 248 million on this return candle. And that's what helped it fuel upwards. This, you see, like you want to look for these breakouts of volume. Yeah, that shit's crazy, dude. Shout out Mark, by the way. This is what you're looking for. You're looking for that sort of volume spike because it gives you the gas that you need to actually push up. It's legit. And that's why it's good to see on Microsoft. The problem is, though, the same thing happens to the downside. So you see how you had this volume spike from Meta? It means like, yeah, this is legit. Or, Apple's probably not going to really show yet. Yeah, it's not really showing yet. But yeah, man. Sucks to see Apple pulling back. You never really want to see that. But at the end of the day, it is just because it was priced in already. And so, like, I'm not going to say for certain top is in for Apple. It really depends. I'll have a clear idea of how I feel about that after Amazon says what they're going to say in 10 minutes. Here, let me go back a little bit. 15 minutes ago, Apple earnings. So, okay. Apple earnings. Amazon earnings. I'm adding timestamps for anyone who just joined. This will be Amazon earnings call at 2 hours. Oh my goodness, dude. What a day, bro. What a wild ass day. What a wild week, man. You're seeing some strength here. It's crazy how frozen the market is right now. It's crazy how frozen the market is right now. Thanks for the last couple of days of marathon. Really appreciate it. Gonna crash now. It's nearly yeah. Get you some sleep, homie. Get you some sleep. I'll let you know. I'll let you know what they say with CapEx. That's like the last piece of the puzzle for this whole week. What a hell of a marathon it's been. I don't know what. Look, we got 10 minutes, so we're just kind of hanging out until Amazon's call. I don't know if you guys have been like watching all of it or not, but dude, we've been running. Shout out to Meat, he's the GOAT. But I mean, we've been really running, dude. Yesterday, we did SoFi's earnings. That was a 2-hour stream. We did Microsoft earnings, Meta earnings, Robinhood earnings. That was a 5-hour stream. We did a 2-hour stream this morning when everything started to pop and Microsoft pumped. We're going to do probably 3.5 hours today. Like, this has been a marathon, but I'm telling you guys, I'm not going anywhere. I'm not going anywhere. I'm really not going anywhere. My thought process is like, when it comes, and by the way, I'm just waiting. We got 10 minutes until Amazon earnings call, so I'm going to yap a little bit until then. But look, I'm here. Like, I'm on the scene now. I know I only started this YouTube channel 5 months ago. I'm new here. Okay, new kid on the block. But truth be told, folks, like, I'm trying to make a name for myself, and I'm just willing to outwork everybody in the space. And that's why I'm going to be here every step of the way, literally every step of the way, as all of this is playing out, the good days, the bad days, whatever. And I'm not only going to cover what's happening, but I'm going to show you what I'm doing, right? I'm going to start a brand new portfolio in front of you because I'm not afraid to lose in front of people. I'm not afraid to lose in front of people. Dude, at the end of the day, like, as a professional cage fighter, I just go into cages and risk getting knocked out in front of everyone I love. I'm not afraid to lose money in front of people I don't know. So I'll build these portfolios in front of you. I'll walk you through all these crazy moments. I'll walk you through all this, show you exactly what I'm doing. I've been in this market 9 years. And I'm going to be here every step of the way until the freaking wheels fall off. So everyone who's been supporting, everyone who's been in here, the homies Treach, Adam, Jacob, all of you guys. Like, I'm here. Like, we're here. And I appreciate it. I honestly do. I appreciate all the love and support. Because I was posting content. My first 10 videos on this channel got 0 views. Didn't care. And I don't care. I don't care how many views I get now. I just care that the people who watch me know what's going on in the market, and I can bring them down to earth when they need to be brought down and show them what I'm doing in my portfolios. Because look, I'm trying to turn these into $1 million portfolios in front of you. I have about $1 million invested in the stock market. I'll be transparent about that. I don't care. I just don't go into where they are and stuff. That starts to get a little weird. But I've showed you one of my retirement accounts. The other one that has like 200K in it. I have it's like 900,000 today in the stock market. I want these to be multiple $1 million portfolios, and I'm going to build them in front of you. And so for those of you who've been here throughout this whole thing, I appreciate it. But I can't wait to look back on this in 5 years and be like, man, what a time that was. You remember that time when AWS came in 37%? Then crashed. I'm joking. Yeah. But anyway, so for those of you who've been here, who've been on the lives, been on the videos, dropping likes, which is really helpful, shout out to you guys, man. I'm really pumped about this journey. It feels great. It feels right. I feel like we got a good thing going here. And I don't know. It's pretty cool. It'll be cool to see where we go from here. I've only been doing this 5 months on this channel. So what do the next 5 look like? What do the next 5 look like? Do we hit 100,000 subscribers one day? How crazy would that be? You know, I've conquered that in one place. I've conquered that in another place. 138,000 subscribers on my crypto channel. That took me 6 years though, you know? Like, do we conquer that here? I don't know. But we'll see. Shout out to y'all. Appreciate the love and the support. But we are about roughly 7 minutes away from Amazon earnings call. Going to be a big one. It's going to be a big one. It's really going to be a big one, especially when you consider price action right now. We have Amazon coming up to this golden zone, and it's going to decide today, in my opinion, what happens here. We're about to find out if Amazon maybe continues up, pushes through golden zone resistance, starts smashing through. Does it get rejected and come back down? Does it return to bottom side golden zone to try to find buyer side support? Maybe. We'll see. We will see. Look at all you, bro. This is awesome. The homie. Talk to you tomorrow, bro. Wayne. I'll show you guys when I'm down. I don't care because I'm not going to be down forever. That's the way I look at it. Can't be down forever. Shout out to you, homie. Yeah, you bet. Appreciate it, Mark. Appreciate all y'all, man. That's awesome. You guys are so supportive. Ooh. Yeah, I'll go look in a little bit. 30K on the day. Dude, I can't wait to chat. Our chat, I think it's tomorrow. So exciting. You Staz and Ross. That's badass. Love to hear it, dude. Look at all y'all, man. This is sick. Sam is locked in on Amazon. Dude, I know Sam is freaking out right now. This guy is one of the only non-LARP investing channels. I feel like too many people LARP these days, which is why you need to show your port. Show the port. Show it. Show the portfolio. You don't have to show all of them. I get it. Privacy. I get it. Yeah, I don't want to be like, here, this is where all my money is in this place and all my money's in that place. That opens you up for risk, right? But you talking about you're making money in the stock market, show it. Show it. What's so hard about that? It's something that bothers me with finance creators is everybody's just like, yeah, I bought $5,000 of SoFi today. Show it. Show something. Show some receipts. Bro, freaking Grok, imagine some receipts or something. Something. Show something. Right? And it doesn't even have to be like this isn't a big portfolio. I hope you guys understand this. Like I've met people with I know people. I have best friends that have portfolios 10 times the size of this. Maybe people y'all know. So this isn't a big portfolio, but it's enough for me to go, hey, when I'm buying thousands of dollars of stocks, you can see I'm not lying. Because people LARP, bro. It's so cringe. So cringe. Imagine just lying. Jay Hammer, appreciate that. Appreciate that. Yeah, y'all are great, man. Preserve yourself. I'm trying. I definitely do feel it on weekends, but I'm good at recovering. I'm good at recovering, so it's all good. 4 minutes. Let's get locked in. Let's get freaking dialed. I'm trying not to curse. I'm really trying. That is on me. I'll let them fly in my alone time, though. Okay. No. There we go. Nope. That was 23. What the heck? Here, I got to enter into. Give me one sec. I just got to enter in some personal info. There we go. Hey, can y'all hear this music? Let me know if y'all could hear that. Appreciate that, Cam. Holy shit. Yeah. Have you seen City News? They spread the fear and buyout leap. It wouldn't shock me. Bet. All right, look, I'm going to go run to the restroom real quick. We got 2 minutes. I'll be right back. All right. AWS, bro. Wild. Yeah, I did wash my hands this time because I got called out yesterday. Connor for sure will beat me in that. You gotta go quick, bro. I got stuff to do, okay? Y'all gonna stop toilet watching me, all right? AWS, man. Jesus, bro. Oh, nope. Pump fake me again, damn. What is this? Oh, hell. Why did I need my microphone? No shot. Good on that. See, the problem is to say, like, I would probably just slowly dollar cost average now because, like, I wouldn't be buying right now. I really wouldn't be buying, like, right now. I would be buying when I bought, I bought when they were down. It's hard. Like, I'm going to keep dollar cost averaging personally, but it's hard to justify buying now that they're up 10, 15, 20%. I would probably just wait. I don't know. It's hard. I'm not sure.
Thank you for standing by. Good day, everyone.
Hey, can y'all hear this?
The Amazon.com Quarter 2 2026 Financial Results Teleconference. At this time, all participants are in a listen-only mode. After the presentation, we will conduct a question-and-answer session. Today's call is being recorded, and for opening remarks, I'll be turning the call over to the Vice President of Investor Relations, Mr. Dave Files. Thank you, sir. Please go ahead.
Hello, and welcome to our Q2 2026 Financial Results Conference Call. Joining us today to answer your questions is Andy Jassy, our CEO, and Brian Olsavsky, our CFO. As you listen to today's conference call, we encourage you to have our press release in front of you, which includes our financial results, as well as metrics and commentary on the quarter. Please note, unless otherwise stated, all comparisons in this call will be against our results for the comparable period of 2025. Our comments and responses to your questions reflect management's views as of today, July 30th, 2026 only, and will include forward-looking statements. Actual results may differ materially. Additional information about factors that could potentially impact our financial results is included in today's press release and our filings with the SEC, including our most recent annual report on Form 10-K and subsequent filings. During this call, we may discuss certain non-GAAP financial measures. In our press accompanying this webcast and our filings with the SEC, each of which is posted on our IR website, you will find additional disclosures regarding these non-GAAP measures, including reconciliations of these measures with comparable GAAP measures. Our guidance incorporates the order trends that we've seen to date and what we believe today to be appropriate assumptions. Our results are inherently unpredictable and may be materially affected by many factors, including fluctuations in foreign exchange rates and energy prices, changes in global economic and geopolitical conditions, tariff and trade policies, resource and supply volatility, including for memory chips, and customer demand and spending, including the impact of recessionary fears, inflation, interest rates, regional labor market constraints, world events, the rate of growth of the internet, online commerce, cloud services, and new and emerging technologies, and the various factors detailed in our filings with the SEC. Our guidance assumes, among other things, that we don't conclude any additional business acquisitions, restructurings, or legal settlements. It's not possible to accurately predict demand for our goods and services, and therefore our actual results could differ materially from our guidance. And now I'll turn the call over to Andy.
Thanks, Dave. We're reporting $200.6 billion in revenue, up 20% year over year. Operating income was $27.5 billion, up 43% year over year. Q2 was another very strong quarter for Amazon. I'll start with AWS, which is booming right now, and I'll share the numbers, what we think's going on, and why we're enthusiastic about the ROIC equation, even with heavy CapEx the next few years. First, the numbers. Revenue growth of 36.7% year over year, accelerating for the fifth straight quarter, our fastest growth in 18 quarters back when AWS was less than half its current revenue size. We added over $4.6 billion in revenue quarter over quarter, about 80% more than our largest increase ever. And our backlog stands at $496 billion, growing triple digits year over year. AWS is now a $169 billion annualized revenue run rate business, which for perspective would place it 24th on the Fortune 500 list if it was a standalone company. Our chips business
That
now
is
has an annual
crazy.
revenue run rate of over $25 billion, growing triple-digit percentages year over year. Our AI revenue run rate climbed significantly quarter over quarter, and is now also over $25 billion, growing triple-digit percentages year over year. Customers choose AWS because we offer the broadest capabilities. They want their AI inference to reside near their other applications and data, and more of it resides in AWS than anywhere else, and because AWS has the strongest security and operational performance. We're seeing strong growth across both AI and non-AI, what we call core, and growth in one is driving growth in the other. Growth in AI drives core because post-training reinforcement learning and agent tool use is mostly done on CPUs versus AI accelerators. This is an advantage for AWS as our Graviton chip is the strongest CPU chip, offering up to 30 to 40% better than other options. You need a place to store this AI data and to run vector databases, which are also emblematic of a meaningful edge for AWS because we have the broadest and most capable functionality by a fair bit in these core infrastructure areas. We feel similarly about the AI stack, top to bottom. We have a unique offering that customers are excited about. As we've been saying for 18 months now, technically competent companies are going to build their own foundation models, not the really big frontier models, but smaller models that leverage their proprietary data. There's no easier service for this than our SageMaker AI service. Customers also need a high-performance, cost-effective inference service, and that's what Amazon Bedrock provides. Bedrock not only provides the best selection of leading models at superior performance and with the governance and security controls that companies need, it's also continuing to grow incredibly quickly. In addition to leading model building and inference services, customers need easier ways to build, run, and leverage agents. For example, even after you've built an agent, you have a lot of muck to worry about. A production agent needs somewhere secure to run, memory so it holds context, an identity so it can act on a user's behalf, tools and data to connect to, and a way to watch what it's doing once real traffic hits. Stitching all that together reliably is hard, and it's stalled many production deployments. It's why we've built Bedrock Agent Core. It provides building blocks as managed infrastructure, and our teams keep iterating, recently adding features like policies, which give companies deterministic controls over what agents can do, payments so agents can execute transactions autonomously, web search to ground agents' knowledge without having to leave AWS, and a new harness that further speeds up how fast customers can put this all together, including creating the agent with strands. While companies will construct their own purpose-built agents from the ground up, most will also use turnkey agentic services. Coding agents are a good example, and there are several successful ones, including Claude Code, Codex, and our own spec-driven Kiro, which is up to 50% more cost-effective than others and tripled in usage quarter over quarter. Another of these agentic services is Amazon Quick, an intelligent AI work companion that helps you manage, search, and automate your digital workload
I love
across
that they're
email,
actually talking
calendar,
about
local
AI.
or cloud files, and custom workflows. Unlike other offerings in this space, Quick also lets you manage across leading SaaS tools like Slack, Salesforce, Jira, Teams, and ServiceNow. Quick enforces a company's existing access controls so each person sees only what they're cleared to see, and then it takes action, scheduling meetings, drafting and sending email, updating a CRM record, building a dashboard, and more. In Q2, we made Quick even more capable, adding autonomous agents that customers set up in plain language to run continuously in the background and carry out multi-step tasks. A personalized activity feed that pulls email, messages, calendars, and tasks into one prioritized view, and 16 new integrations, including Adobe, Moody's, and Snowflake. Quick has momentum, with 3M, Allianz, AstraZeneca, Autodesk, BMW, Exxon, FINRA, Hyundai, Intuit, Mondelez, Moody's, the NBA, the NFL, Life Insurance, and Southwest Airlines all using it. We also have services like Amazon Connect, our call center service, and AWS Transform, which automates software migration, growing quickly. I'll mention one more that I'm excited about. As frontier models get increasingly powerful, they're making it easier to find security vulnerabilities in technical applications, many of which humans haven't found. This is obviously concerning for companies that protect important data. We recently released AWS Continuum, which discovers, prioritizes, validates, and remediates code vulnerabilities. It starts by ingesting the backlog of vulnerabilities a team already has, and then leverages the new frontier models to run comprehensive scans. Continuum uses agents in each company's own business context to prioritize what matters, reasoning through questions like, is the affected component deployed? Is it reachable? Is it in a production path? And what's the impact if it's exploited? It then validates vulnerabilities in a sandbox so teams aren't chasing false positives. And finally, it recommends the fix. It's hard to talk with enterprises about AI right now without their mentioning security, and we expect Continuum to grow quickly. I mentioned earlier that our chips revenue run rate is now over $25 billion. We're unusually well positioned for this AI inflection, given our leading price performance chips in both AI with Trainium and CPU with Graviton. In addition to the two leading AI labs in the world, Anthropic and OpenAI, making multi-year, multi-gigawatt commitments to Trainium, an increasing number of AI startups are also adopting Trainium, including unicorns like Neurorobotics and Odyssey, joining startups like 12 Labs, Descartes, Poolside, Karakuri, Metagenemy, Neto AI, and Splash Music, and larger companies like Uber and Pinterest all adopting Trainium. Graviton is used by 98% of our top 1,000 EC2 customers. The revenue commitments have increased nearly 3 times quarter over quarter, and Graviton 5 is growing nearly 2x faster as Graviton 4 did. We also continue to have a deep partnership with NVIDIA, and will continue making AWS the best place to run NVIDIA chips, as we have customers who will run on NVIDIA for as long as we can foresee. And we believe strongly that customers want choice. Choice is good for customers, competition, and driving the cost of inference down, which customers care deeply about. Let me talk for a second about how we see this investment playing out. Earlier this year, we said we plan to invest approximately $200 billion in cash CapEx in 2026, the majority of which to support AI and AWS. At this level of spend and higher, we have clear line of sight to strong financial returns. I'll explain why. There are 2 major parts of the investment: the data centers and the servers and networking equipment that go into them. These have different capital cycles. Data center capital is spent starting 2 years before we can put servers into them to start monetizing. Once a data center opens with servers plugged in, we start generating significant revenue right away, and then get to monetize these data centers for 30 plus years without having to spend that startup capital again. Servers and networking equipment operate on a shorter cycle. We typically purchase these a few months before putting them into service, so we have strong visibility into customer demand before we trigger the spend. If the demand isn't there, we won't spend the capital. For servers and networking equipment, on average, it takes a little less than 3 years to break even on that investment. The servers currently have a useful life of at least 5 to 6 years. And most of our AI capacity these days is being contracted for at least 5-year terms. That means that we're driving significant free cash flow on the servers and networking equipment in the 2 to 3 years after we break even. It's also worth noting that AWS has a strong track record of pulling forward break-evens on server equipment, where we've already made meaningful progress, and finding ways to extend the useful life of this equipment without sacrificing customer experience. So for our data centers, which have 30-plus year useful lives, we should get at least 5 to 6 generations of server economics like I explained earlier, with subsequent generations after the first having even better overall economics because we don't have to repeat that upfront data center investment I mentioned earlier. This means in the short term, when demand is necessitating so many data centers being built simultaneously in advance of when we can start monetizing them, we'll spend a lot of CapEx and encounter free cash flow headwinds until these data centers come online, can be monetized, and we get a few years into these servers being utilized. But as we get a few years out, and the revenue growth outpaces the incremental CapEx growth, which will happen at some point, the resulting revenue, free cash flow, and return on invested capital is very compelling. We've done this before in the first era of cloud computing, just over a longer time horizon, where demand built more gradually than it has in AI. But we see the margins and returns in AI tracking what we saw with core at the same point of evolution, actually a little ahead. We now believe we will spend approximately $220 billion in cash CapEx in 2026, the higher cost of memory pushing this number up from our prior estimate of about $200 billion. But even at that amount, we will still not have enough capacity to meet all the demand we have in 2026, and I believe this dynamic will also be true in 2027 too. In fact, the demand we already have for 2028 is striking. And remember, enterprises are still very early in using inference at scale in their current production applications. We've long believed AWS could become a few $100 billion revenue business, and now believe it'll be at least double that, and very possibly be a $1 trillion annual revenue business for us in time, with very appealing accompanying free cash flow and return on invested capital. I'll now turn to stores. We added millions of new products to our selection, including over 700,000 from notable brands. We also expanded ultra-low price selection on Amazon Haul in the US by nearly 20x since launch, and now have over 6 million items priced under $10. We continue offering everyday low prices that meet or beat our competitors, as well as deep discounts and savings during sales events. We're pleased with the customer response to Prime Day, where customers shop millions of deals, including more than 80% at our lowest price of the year and hundreds of thousands discounted by 40% or more. We're the second largest grocer in the US, and our grocery business continues growing quickly across perishables and non-perishables. The number of monthly active perishables customers grew over 50% since the start of the year. Same-day orders with perishables average over 3x more units per order, and fresh groceries now make up 6 of the top 20 bestsellers on Amazon.com. We grew the number of new customers for Amazon Pharmacy by more than 2x in the first 6 months of the year, and same-day prescription deliveries nearly 5x. We also saved customers nearly $250 million so far this year in out-of-pocket costs, up more than 400% year over year. We continue speeding up overall delivery and once again achieved record delivery speeds for customers in the first half of the year. We offer millions of items for same-day delivery with Prime, up to 40 times more selection than a typical big box retail store, and our same-day network continues to expand. Globally, we delivered over 40% more items same day or overnight in the first 6 months of the year than the same period last year. We also continue to expand our ultra-fast service, Amazon Now, which offers delivery in 30 minutes or less on thousands of everyday essentials. We added 80 new cities and towns across the US and several major cities in Egypt in Q2. And Amazon Now is available in 9 countries and over 250 cities and towns globally. We continue to see strong customer response with over 80% growth in gross sales and units sold quarter over quarter, and we served over 60% more customers quarter over quarter. We recently launched Amazon Supply Chain Services, so any business can move, store, and deliver everything from raw materials to finished products using the same supply chain that supports Amazon. And we already have several large customers, including Procter & Gamble, 3M, Lands' End, and American Eagle Outfitters. The stores team also continues to innovate and deliver for customers with AI. Customers love Alexa for Shopping, our agentic AI shopping assistant. It offers personalized recommendations, product comparisons, price history, and the ability to automate shopping through features like price alerts and auto buy. Over 350 million customers have used it in the last 12 months, and engagement accelerated in Q2, with active users nearly doubling and interactions up over 5x year over year. We also expanded Amazon Lens, which lets customers take a photo of anything they see and instantly find the same or similar items on Amazon, to 10 additional countries. It's now available in 21 countries around the world. Moving on to Amazon Ads, we saw strong growth across our offerings, generating $19.8 billion of revenue, up 26% year over year. Sponsored products continues to be our largest offering and a key driver of growth. Additionally, increasingly more shoppers are discovering products in our agentic and conversational experiences, including in Alexa Plus and Alexa for Shopping. Shoppers who click a sponsored prompt convert to a sale 48% more often and spend 21% more on average than those who don't. We see continued growth and engagement in Prime Video ads and live sports. We introduced more than 30 new advertisers to the NBA in our first year, and inventory on Thursday Night Football NBA, WNBA, and NASCAR all sold out. Advertisers are increasingly investing in multi-sport strategies, with brands activating across multiple sports, seeing 2.3 times higher unduplicated reach compared to single sport advertisers, and multi-sport viewers are driving 12% higher spend and 17% more orders on Amazon. And finally, we make it easy to create, launch, and optimize full funnel campaigns using AI-powered tools, including Ads Agent, which turns hours of setup and targeting into minutes. Advertisers using Ads Agent targeting see 8% lower cost per impression and 6% lower cost per acquisition, and we've expanded it to 11 new countries this year. We're also continuing to see momentum in several other areas, and I'll mention just a few. Starting with entertainment, the inaugural season of NBA on Prime Video delivered strong viewership, with a peak of 6.5 million U.S. viewers for Game 7 of the Eastern Conference semifinals, outperforming Game 7 on broadcast a year ago. In Europe, viewership in the NBA more than doubled year over year on Prime Video, with the highest average viewership on record. We also drew 36 million viewers globally for the series premiere of Off Campus on Prime Video in its first 12 days, becoming Prime Video's #3 top-viewed series debut ever. Alexa Plus expanded to Germany, Austria, France, and Brazil, and hundreds of millions of customers are using new Alexa experiences. We find that everywhere Alexa goes, it drives momentum for the business. For example, in the U.S., customers who use Alexa for shopping spend an average of over 40% more per order than those who don't. And customers who've tried Alexa Plus are signing up for Prime at nearly 25% higher rates. And finally, Amazon Leo is close to 400 satellites in orbit, enough to begin initial satellite internet service this year. We already have meaningful revenue commitments from enterprises and government customers, and we have more than 20 partners who will extend the reach of our network across the globe. We continue to be in the middle of some of the biggest inflections of our lifetime, and we're building multiple new long-term businesses that will make customers' lives better and easier and lead to substantial free cash flow and return invested capital for our shareholders and business. With that, I'll turn it over to Brian.
Thanks, Andy. Starting with our top-line financial results, worldwide revenue was $200.6 billion, a 20% increase year over year, excluding the impact of foreign exchange. These results include a timing shift of Prime Day into Q2 for most of our largest countries, including the United States. In Q2, we reported worldwide operating income of $27.5 billion. This includes the benefit from two items that reduced expenses by approximately $1.2 billion during the quarter. First, we received tariff-related refunds of approximately $600 million. This is included in our North America segment and represents the significant majority of refunds we expect to receive. Second, we recorded a separate benefit of approximately $600 million related to the change in fair value measurement of energy contracts subject to derivative accounting. This primarily impacts the AWS segment. These energy contracts are to secure electricity supply for existing and future operations. Certain terms in these contracts cause them to be subject to derivative accounting. Derivatives are measured at fair value each reporting period, and changes in fair value measurements will create unrealized gains and losses recorded within operating expenses on our statements of operations. While the impact of these fair value measurements can vary, these adjustments have not been significant in prior quarters. Moving on to our segment results. In the North America segment, second quarter revenue was $116.2 billion, an increase of 16% year over year. International segment revenue was $42.2 billion, an increase of 15% year over year, excluding the impact of foreign exchange. Worldwide paid units grew 17% year over year. Prime remains a key pillar of our business, and our double-digit year-over-year membership growth reflects the value our offerings deliver at scale. We saw broad-based momentum across the inputs that drive our customer experience, including new selection, sharp prices, and fast delivery. Shifting to profitability, North America segment operating income was $9.1 billion, with an operating margin of 7.9%. International segment operating income was $1.7 billion, with an operating margin of 4.1%. In our fulfillment network, we've made progress optimizing inventory placement, shortening shipping distances, reducing touches per package, and improving consolidation rates. we're expanding our deployment of robotics and automation, which have been integral to our operations for decades. We're retrofitting our facilities with our latest generation technology, and we expect to more than double our fleet of robotic arms like Cardinal and Sparrow in 2026. We continue to lower our overall cost to serve, even as we faced heightened transportation costs driven by fuel inflation from the conflict in the Middle East and higher line haul rates from driver capacity limitations. Excluding the impact of higher fuel and line haul rates, shipping costs grew more slowly than worldwide unit growth at a pace that is relatively consistent with last quarter. On the operating income side, the impact of these higher costs is partially offset by our FBA fuel and logistics surcharge that was implemented in April. Looking ahead, we see meaningful opportunities to further enhance productivity across our global fulfillment network, all while continuing to raise the bar in delivery speed. While our operating margin may fluctuate and progress may not always be linear, we take a deliberate approach to achieving sustained long-term improvement in our cost to serve. Moving to the AWS segment, revenue is $42.2 billion, up 36.7% year over year, driven by both core and AI services. AWS now has an annualized revenue run rate of $169 billion. Customers continue to increase cloud migrations and scale up their use of AWS core services. And increasingly, customers seeking the full benefits of AI are accelerating their transition to the cloud. We see a strong linkage between AI spend and core growth. As customers invest in AI, we see a corresponding increase in core consumption. We expect this relationship to strengthen over time as more AI workloads move into full-scale production and drive additional demand for our core services. AWS operating income was $16.6 billion, which reflects our strong growth coupled with our focus on driving efficiencies across the business. Our investments in software and process improvements optimize server capacity and help to develop a more efficient network using our lower-cost custom silicon and custom network gear. Now turning to our cash CapEx, which is $53.1 billion in Q2. This primarily relates to AWS and generative AI as we invest to support strong customer demand. We'll continue to make significant investments, especially in generative AI, as we believe it to be a massive opportunity with the potential to drive long-term revenue and free cash flow. Before moving on to guidance, I'll briefly touch on the impact from the tariff-related refunds on our results. We are participating in the tariff refund process, and as I mentioned earlier, we received approximately $600 million in Q2. The amount is limited for a couple of reasons. First, our teams did a lot of work forward buying and pre-positioning inventory to avoid tariff costs. Second, we are not the importer of record for the large majority of items sold in our store, given suppliers typically handle imports and pay relevant tariffs. In cases where we did see an increase in costs due to tariffs, we largely absorbed these costs rather than pass them on to customers. You can see that in how we stayed very sharp in our price throughout the last year, with our product prices on average 14% less than other retailers, according to third-party research firm Profitero. We have identified a limited set of circumstances where we can trace that we pass specific import charges on to customers, and when we receive those refunds, we will proactively contact affected customers and automatically issue refunds to them. Otherwise, like other large retailers, we'll utilize refunds to continue to invest in low prices for customers. I'll finish with our financial guidance. Q3 net sales are expected to be between $197 billion and $202 billion. I'll call out two areas that are driving the sequential deceleration in net sales growth from Q2 to Q3. First, Prime Day timing shifted this year with the sales event occurring in Q2 for most of our large countries, including the US. In 2025, Prime Day was entirely in Q3. Excluding the impact of Prime Day in both 2025 and 2026, third quarter 2026 year-over-year growth would have been nearly 400 basis points higher. We recognize that the timing shift of Prime Day creates some noise in the modeling of our financial results. However, after adjusting for Prime Day, as we look across our stores business heading into Q3, we see strong customer engagement, growth, and a continuation of the trends that we have seen in the first half of the year. Second, the Q3 guidance anticipates an unfavorable impact of approximately 80 basis points from the year-over-year changes in foreign exchange rates based on current rates. Q3 operating income is expected to be between $22.5 billion and $26.5 billion. I want to thank our teams across the company for their hard work and focus on customers. We'll continue to work to deliver more value to the broad range of customers we serve across each of our businesses, which is the only reliable way to create lasting value for our shareholders. With that, let's move on to your questions.
Thank you. At this time, we will now open the call up for questions. We ask each caller to please limit yourself to one question. If you would like to ask a question, please press star one on your keypad. We ask that when you pose your question, you pick up your handsets to provide optimum sound quality. Once again, to initiate a question, please press star, then one on your touch-tone telephone at this time. Please hold while we poll for questions. And the first question comes from the line of Doug Anmuth with JP Morgan. Please proceed.
Great. Thanks for taking questions. Just one for Brian and one for Andy. Brian, many have assumed that AI workloads would be lower margin, at least near term. Can you just talk about the drivers of the 39% AWS operating margin in 2Q and just how we should think about sustainability? And then, Andy, strong Bedrock traction with customers spending more in the quarter than in all the prior quarters combined. But when you think about the full stack offering, does Amazon need its own leading model toward the frontier? Thank you.
Doug, let me start with the first question. Yes, we're pleased with the growth in both revenue and also margin expansion that we had in AWS in Q2, especially given the size of our business. You're seeing, despite the large investments, AWS margins have continued to remain strong, and we're up 650 basis points year over year, 520 basis points if you exclude the derivative accounting gain that I mentioned. We've said before these margins will fluctuate. They're based on a number of factors, including our investment levels, mix of products, mix of AI versus non-AI. But I would say that the profitability you're seeing from AWS isn't random. It's a result of disciplined efficiency gains, capacity optimization, which we've benefited quite a bit from in Q2, and always closely managing our fixed costs. So again, they'll fluctuate, but very strong performance year over year, and we'll take it.
Yeah, I'll just add one other thing to what Brian said, which is, as I mentioned in my opening comments, we see the AI business following very much the same type of margin trajectory that we saw in the core business before, and it's a little bit ahead of that pace that we saw. So we're optimistic about that. On the question about Bedrock and our own frontier model, so my view of it is that AWS and Amazon can have a wildly successful business without its own frontier model, and a lot of that is because there is not going to be one model to rule the world. You already see that right now. You see it. It's not just Anthropic or it's not just OpenAI. You see increasingly more and more companies being interested in the open models as well. And we have all of them in Bedrock. And it's one of the many reasons why Bedrock is growing so quickly. If you're a company that's building important AI applications, you want to make sure that you have the ability to use all the available models. They're going to each leapfrog each other at different times. They're going to have lots of different models that actually are comparable in capabilities. And you want that leading selection with the right price performance and with the right governance and security. And there's nothing like Bedrock that provides that right now. And we use those models as well. All that said, we are pursuing our own frontier model, and we're doing it for a few reasons. First of which is it just gives us additional control over cost for our own consumer applications, but also we're trying to drive costs down for customers. And having a player like ourselves that's always focused on trying to take the price performance and the cost down for customers all the time, we think will help keep the models more cost effective for customers. I think also it allows us to have more control over prioritization on what models focus on. And we have both from our own external customers as well as our internal customers inside the company,
certain priorities that matter that we want the models trained especially well for, and then it gives us some control on speed. And so my view of it is that, within the next few years, you're going to have at least a half dozen models that are comparably good to each other. They'll all be in Bedrock, and one of them will be ours.
Thank you. The next question comes from the line of Justin Post with Bank of America. Please proceed with your question.
Great. Thank you. Just thinking about the AWS acceleration, was that really driven by a lot of capacity coming online in the quarter? You guys have been very more open than your peers on gigawatts you're adding. Any help you can give us on how much you might be adding in the second half versus the first half, and also how you're thinking about 27? Thank you.
Yeah, I think that there are several reasons for why we saw such significant growth, and it's we're really pleased and excited. Fifth straight acceleration quarter, largest acceleration in 18 quarters. I think there are several things that are driving it. I think the first part is that customers are choosing AWS in part because it has the broadest functionality across both cloud core and AI, in part because it has the strongest operational performance and security, and in part because as more and more companies are bringing their inference workloads to production, they want it to live near the rest of their workloads and data, and so much more of it lives in AWS than anywhere else. I think there are a couple other things going on here on the core side. I mean, AI is obviously growing at a very rapid rate, as we talked about, well over $25 billion in annual revenue run rate at this point. But the core business is growing very quickly as well. And I think there's at least a couple things at play. One is that increasingly more enterprises are building their transformation plan to move from on-premises to the cloud. Remember, by the way, that 85% of the global IT spend is still on-premises. That equation is going to flip in the next 10 to 20 years. And you see more and more enterprises that are moving and building plans to move to the cloud, and we're winning the lion's share of those with the capabilities I mentioned earlier and the advantages. And then AI is growing, at such a rapid rate, and it's pulling along core alongside of it. And that's because the post-training and the reinforcement learning and all the agentic tool use is being driven on CPU and core. And with the leading CPU chip and Graviton, it makes AWS an even more attractive choice. So yes, we're adding a lot of capacity, but there are a lot of other reasons why it's growing. I expect that we will, we're on pace with the capacity build that we talked about a few quarters ago, where we said we expect to have double the capacity, power capacity by the end of 27 that we had in 25, and we continue to be on that track.
Thank you. The next question comes from the line of Brian Nowak with Morgan Stanley. Please proceed with your question.
Thanks for taking my questions. I have two, Andy. I appreciate the color on the long-lived data centers investments versus the server and network investments. Just the question is, as you sort of look into 2027, you look at the demand that's coming, et cetera, are you at a point where you're going to be able to start to slow that long-lived data center spend at all in 27, or is that just
listen very closely to this?
New data centers for the next 2, 3, 4 years as you look into 27. That's number one. Second one, in the past 90 days or so, the company's talked publicly about selling Trainium at some point to third-party data centers. How do you think about when you could do that, and just sort of the ROIC on that versus core AWS loads?
Well, on the first question, Brian, we have so much demand right now. Apart from what we've talked about in 26, the lion's share of capacity in 27, and we're adding a lot of capacity, as I mentioned just a few minutes ago, is largely reserved, and we have quite a bit of capacity that's already been reserved for 28. And so I think it's actually kind of useful to look at least our view of what we see in the demand and adoption curve right now, which is we see this adoption curve in AI right now is very barbelled. There is, on one end of the barbell,
the AI labs are consuming gobs and gobs of compute, and there are a few runaway successful generative AI applications like Claude Code and ChatGPT. And on the other end of the barbell are enterprises who are getting real value from AI in cost avoidance and productivity. And these are things like automating customer service or business process automation or fraud or things like that. In the middle of the barbell is all of the current enterprise production workloads, some of which are using inference in a pervasive way, but most of which aren't. And that is going to change very significantly over time. And that will be, in my opinion, that will be the largest absolute segment. The existing production workloads in the enterprise and new businesses and workloads that startups build too. And so I think we're still in the relative early stages of how much demand there's going to be for AI. I think it's going to change every customer experience that we know. I think that it will invent all sorts of new ones that we never imagined. And I don't know if the trajectory of that middle part of the barbell will be the same wildly steep trajectory that we've seen with the current barbell, the AI labs piece. But we have a lot of demand in front of us, and we're going to invest in this business to continue to be the significant market segment leader that we are today. We think, as I mentioned earlier, it has the potential to be $1 trillion revenue business for AWS, and we intend on continuing to be the leaders. On the question about selling Trainium, we're quite excited about what's happening in our chips business. As I mentioned earlier, it's over $25 billion in annual revenue at this point. We think we have the leading price performance chip in both the AI space with Trainium and in the CPU space with Graviton. The fact that we have multi-year, multi-gigawatt commitments from the two largest AI labs, Anthropic and OpenAI, and more companies, as I mentioned in my opening comments, using Trainium is exciting and promising. And we just have an incredible amount of demand for Trainium. So there are a lot of customers who are very excited about using it in the form that we're providing right now. We do have an increasing number of customers who are interested in us providing the Trainium chips to them separate from, even from our cloud. And we're actively having those conversations and exploring, and I expect there's a real chance we'll do that in the future.
Thank you. The next question comes from the line of Colin Sebastian with Baird. Please proceed with your question.
Yeah, good afternoon. Thanks very much. Andy, is it fair to say that there's a more concerted effort to move into the application layer with Kiro and Transform, and I guess more broadly plans for workplace productivity tools? And do you see those as sort of providing a boost to the broader platform offering from infrastructure on up? And then Brian, I mean, just given the demand signals you guys are both talking about and plans for additional capacity, what are your current thoughts on sources of capital for the build out over the next couple of years? Thank you.
Hi, Colin. Let me take your second question first. You've seen us issue debt this year. We have a lot of options available to us as we continue to fund this growth that we're seeing in AWS. So we'll continue to look at all the options and make the appropriate decision at the right time, but nothing to share today.
And your first question, Colin, we see a very substantial opportunity both for our customers and for AWS in building some of these agentic applications. And some of this is born out of what customers tell us they wish they had and they want to be using. Some of it is born out of just needing to provide those capabilities to ourselves inside Amazon. And so, Kiro, which is our agentic coding service, is an example of that. But Amazon Quick's a really interesting example where we just had so many people inside the company who wanted really an intelligent AI assistant to help them work. At first it started off with, we're a very document-oriented culture. People wanted, when they got documents, not to have to read every document so carefully and to get a summary and then to be able to write their own analyses and responses to these things and to be able to do business intelligence through these agents. And that's really how Amazon Quick started, was to do research, to do business intelligence, to do summarization. And then we had so many people inside the company using it that they said, can't you actually find a way to make it much more productive and easier for us to manage our email, to manage our Slack communications, to manage our calendar, and to use all those things together? And that's really this next instantiation of Amazon Quick. And as I mentioned in my opening comments, it's pretty remarkable not only how fast it's taken off inside Amazon, but how many external enterprises have put it into production with a very large number of people at their companies. And we see that opportunity up and down, kind of the different needs of companies. I think that Connect, Amazon Connect, which is our call center service, which is used by all 5 major leading airline providers, as well as many of the leading banks and healthcare companies, continues to grow very quickly. AWS Transform, which makes it much easier to migrate software, is super useful for enterprises. And then the latest one we just launched with Continuum, it's really hard to have a conversation with a large company about AI right now where they don't actually ask you about security, with just all the noise and the hype about the security risk with the most current powerful models. And so Continuum really allows them to use those models productively, to find their own vulnerabilities in their code, to design the fixes, and to help them deploy them. And those are kind of the first set of them. They all have very high promise, but there are several others that we're working on, and we think that's going to be very helpful for customers and our business.
Thank you. The next question comes from the line of Jason Helfstein with Oppenheimer and Company. Please proceed with your question. Jason, your line is now live.
Bro's fumbling the bag.
Okay, the next question comes from the line of Ken Gorelski with Wells Fargo. Please proceed with your question.
Thanks so much. 2, if I may. First, your RPO reported is 2.5 times that of the third quarter of 25 when you gave us the doubling of capacity comments for year-end 27. How does that RPO number and the massive expansion there impact your outlook for future capacity? I know that you talked about through year-end 27, but maybe at least qualitatively, if you could touch upon what the RPO means for 28 and beyond capacity. And the second one related is, you raised your CapEx guidance this year for some supply chain inflation. Could you talk about how your pricing strategy at AWS incorporates future cost inflation? Your longer term contracts allow for stable return profiles despite cost inflation? Thank you.
Yeah, I'll start on the backlog number. To your point, it's very substantially continuing to grow. I think it's a reflection, again, of customers being very, very enthusiastic about using AWS, both across core and for AI. We have taken in, we know about that backlog, obviously, so that's all taken into account in our CapEx projections. And, over time, I expect that we will continue to sign more deals with customers. And as I mentioned earlier, we're going to pursue the opportunity to continue being the significant market segment leader that we are. On the second question on the supply chain inflation, what I would say is that most of the deals that you sign, other than, there's a certain amount of your demand that is on demand, where there aren't contracts, but a large amount of it tends to be deals and agreements that you've signed. And the deals that you've signed, those will be the prices and those will be the agreements that we have over the duration of that contract. And new agreements that you assign, you always take into account what your costs are in how you ultimately build a price that you agree to with your customers. And I think it's no secret right now to any company in the world that there are inflated prices right now on some of the components like memory and hard drives and SSDs.
Thank you. Our final question comes from the line of Eric Sheridan with Goldman Sachs. Please proceed with your question.
Thanks so much for taking the question. Maybe pivoting to the commerce business. When you're talking about scaling some of your initiatives around fast commerce and a wider array of supply of groceries and everyday essentials, can you talk a little bit about the signal you're getting from consumers in terms of either adoption rates of those services or what it's doing to overall spend trends, and whether there's any countries or geographies where you're seeing different outcomes as you launch and scale some of those services? Thanks so much.
Yeah, we are quite enthusiastic and excited about the pace with which we are growing the amount of everyday essentials as well as perishables in the business right now. And I think some of that has to do with the broader selection we have, and some of that has to do with just how fast our delivery has gotten over the last 2 to 3 years. And when you can deliver items to people, when you have that broad selection like we do at low prices, and you can deliver that selection to people as fast as we are right now, people consider you for a lot more of their total purchases and shopping visits. And we've talked for a while about grocery, and we have a very large business in that space. It's last year it was over $150 billion in gross merchandise sales, making us the second largest grocer in the U.S. And a lot of that are non-perishables. The middle aisles that you'd find in a grocery store, where you have consumables and canned goods and beauty items and pharmaceutical items. A big chunk of it is our Whole Foods Market business, which is the leading organic grocer out there. And if you look at the growth in geographies that Whole Foods Markets are in, they're significantly outpacing the growth of comparable grocers, and the profit trajectory continues to trend the right way as well. And we found a new format there in Daily Shop in urban settings. It's off to an amazing start that we're expanding very rapidly. And then we always knew that if we wanted to serve the number of customers who want us to serve them and that we want to serve, we had to find a way to offer mass brands and perishables in a significant way. And we've tried lots of experiments over the last few years, as we've talked about on this call for a few years. But we have finally found something that is a real needle mover for us in offering perishables in our same-day facilities, that we're now able to offer same-day perishables in 2,300 cities around the U.S. If you look in those cities, 9 of the top 10 bestsellers in those geographies are perishables. The number of monthly active perishable customers has increased 50% since the start of this year. And for same-day orders with perishables, on average, they average 3 times more units per order. And so we're just seeing very significant traction in our everyday essentials and in our grocery items. And we're not done experimenting, by the way, with other physical formats in the grocery side, but we've hit on something with same-day perishables in our same-day facilities that's changing the trajectory of our everyday essentials business.
Joining us on the call today and for your questions. A replay will be available on our investor relations website for at least 3 months. We appreciate your interest in Amazon and look forward to speaking with you again next quarter.
Well, that was weird. It's okay. All right, I have a bunch of different thoughts, and this is what I'm going to do. I haven't really had time to think about. All right, so this is where we are. Google releases earnings, beats earnings, Beats revenue, beats EPS, beats everything. Google Cloud revenue continues to climb. Great margins. Google increases their CapEx guidance. Google crashes 10% and brings everything down with it. That was on the 22nd. Google fell 3%, if I remember correctly. Someone fact check me on this, please. Google fell 3% after hours the first day that they increased CapEx guidance, 7% the next day. Fast forward 1 week. Was it a week? Yeah, fast forward a week or so. Microsoft reports great across the board, keeps CapEx the same, sends. Absolute, just, I mean, literally straight vertical, 15, 20% move. So Wall Street gets excited because it goes to show that these hyperscalers can kind of just turn off the CapEx spend whenever they think it's like they'll get to a level where they think it makes sense and they'll just unplug it. So it gives Wall Street confidence that these hyperscalers know what they're doing. They're not just recklessly spending and adding more and adding more and adding more. It brings more confidence into hyperscalers. That's why Amazon starts pumping 5% today. So Microsoft is still up. Google's kind of recovered. Google's only down 2% from before earnings report. Amazon smashes. Amazon smashes earnings, smashes revenue. AWS grows at 37%, beating 31%, 6% clip. Amazon announces Wall Street's expecting $207 billion CapEx guidance, which is a $7 billion increase off the $200 billion. They give us 220. They say 220, and Amazon is up. Since that moment, which would have been right here, Amazon's up 2% since then, but struggling to gain momentum and showing clear bearish divergence. But it wasn't an immediate sell-off. Apple reports earnings, Apple crashes because that was priced in. Why can Amazon report the same thing as Google and not fall? It had to have been priced in. Google reports, Amazon crashes. Amazon's down going into this week. Wall Street was expecting Amazon to raise by $7 billion. Sell the rumor, buy the news. Was a price increase already factored in? Were they going to pop anyway? Was this the moment where Google took the beating? Google took the beating because they're the ones who surprised the market a little bit. They're the ones who came out first and raised CapEx. So did Google were they the trigger? Were they the ones who set it all off and set off all the worry? The market priced in the fact that CapEx was going up. So the fact that CapEx didn't go up for Microsoft reversed all of that and then sent it even further. Amazon does maybe what the market was expecting them to do anyway, which was raise. Because the market did expect Amazon to raise by $7 billion. That is true. Everyone knew that. Everyone was expecting them to raise by $7 billion. I just don't know if anyone was expecting them to go past that. So then they do exactly, they raise. It was already priced in because the price was down from the Google crash. That's a hard narrative to lean on. Maybe the market just believes Amazon's going to figure it out. Or maybe is it that Microsoft showed the market that these hyperscalers are still in control. These hyperscalers know what they're doing. Yeah, they're going into debt. But think about it. I mean, he just said, Buddy from Amazon just said just now that it's a barbell. Eventually, they will have to stop spending. Maybe that is bringing some ease to them, right? You have, okay, Microsoft goes and they They say, look, we don't need to spend anymore. Our numbers are right. Boom. Amazon comes out and says, hey, we're raising guidance a little bit right now, and we may need to continue afterwards, but there will come a time where we're not going to need to raise it anymore, and the revenue is going to outpace what we're spending, and those margins are going to start to widen greatly. And then, 5-year, 6-year life on some of it, so we will need to spend money on it, but in general, the revenue will be coming in. The investment return will come in. Look at AWS as an example of this. Look at the 37% growth. Look at the margins growing to 39%. That's proof. And you have a Microsoft that comes in good. The market believes them. The market believes them. The question is, does it hold up tomorrow? The question is, does it hold up tomorrow? Google kind of pulled back the first after hours, then nuked the next day. So I think what we need to do is watch tomorrow. But it feels like the market believes. It believes that Amazon is going to, like, maybe, you remember I told you one day the narrative is going to flip somehow? Maybe this is the narrative flipping. And AWS growth, like we saw, makes the market go, damn, maybe they're right. And they can just turn it off. Microsoft showed you can just turn it off. You just stop raising. Yeah, maybe the market's starting to believe it. And then this is huge for semis. This is great news for semis, because Amazon said we're still early on the barbell curve. And if you don't know what a barbell curve is, it's like, well, I guess it's backwards for you guys. It's like that. But it goes to show that there's still a lot more. Like Amazon, the biggest hyperscaler, is going to be spending more and more. So naturally, your semis are going to go up. Yo, this shit's all over that. I was so certain that if Amazon came out and raised CapEx past $207 billion, that they were going to fall. But obviously, the market will, what do I tell you guys all the time? The market will do the thing you don't think it's going to do. I was on a podcast with the boys on Open Walls the other day. I was like, is there a world in which one of these raises guidance and it still just pumps? Because the whole market's expecting it to dump. It's such a weird thing. This market's so crazy, bro. This market's so crazy. It's like I'm still excited, but for some reason that threw me for a spin just now. When bro said we're raising it to 220, I went, uh-oh. And then the price kind of just went, and I was like, huh. We need to see what happens tomorrow. I think we will know if the market actually believes Amazon tomorrow. Because remember, right, we are still at a major zone of resistance for Amazon. A massive golden zone between 260 and 267. This is going to be one of those areas where, like, if Amazon can break it, that's huge. If it can't, it's bad. Does Amazon come up and, I mean, it in theory, has already set the new higher high. We're at it now. We need to see what happens tomorrow. I'm like, I don't love that. It's like my gut says it pulls back. My gut says it starts coming back down. I don't know why, and I might be wrong, right? I hope I'm wrong. Yeah, my gut says it pulls back. I don't know. I have no. At this point, I just do not know. There's so much nuance to all of this now. You got Google breaking out a little. Yeah, way smaller. Way smaller. Also, in terms of if you also compare revenue generated by their cloud programs and platforms. Whew. This is going to be what tomorrow is just like. Now it sucks because I was hoping today we got clarity of like how the market was going to digest all this. It would have made perfect sense for Amazon to raise guidance. Amazon pulls back. People like rotate back to Microsoft. Now we know exactly what the market's doing. Market can't let you know what's going on. So now we got to see what happens tomorrow. Now we got to see what happens tomorrow. Oh my goodness, man. What a wild market we're in. Hey, at least we're in this together, boys and gals. But this is great. This is great for semis. That was a great piece of news for semis. What happens? Let's see. Let's see. I'm just curious, does the market believe Amazon or not? Do investors believe that Amazon is going to do what they say they will do? That's the whole question. And I think tomorrow we're going to get a lot of insight into how the market's feeling about it. Whew, man. I know. I literally thought tomorrow was going to be able to calm down. And it will be more chill, like not as much news, but yeah. And then Apple's getting smoked. Apple's getting smoked right now. Apple's currently at 312, recovering decently though. Yeah. It's crazy. I don't really know. It's hard. I have to still wrap my mind around like all of the events and how it pieces together. But yeah, man. Shout out to the homie. It was me. I made a call to the higher ups to pump. Appreciate that, G. Appreciate the donation, man. Love, all love. Oh my goodness, guys. What a long day. What a long day. What a fun day. Super eventful day. Damn good one. And hey, we're up, boys and gals. We're up. Hyperscaler portfolio gave us almost $400 gain today. And remember, $400 gain on a $10,000 portfolio, cool, it's 4%. But remember, I only have $4,200 deployed. We're on a 10% gain today on my deployed capital in the hyperscalers bet. I did think I was going to have more time. with this trade. And I feel like my window is closing. We'll see tomorrow and going into next week. I thought I had more time to get my full 10K in at discounted prices. And now I'm a little bit concerned. And it makes me, yeah. I'm a little concerned I might not be able to full deploy how I wanted to, but I'll see. Portfolio up $7,500 on the day. Man. Crazy, dude. It is such a wild day. Look at SoFi up 7.3%. Still going after hours. Just fucking wild. What a wild day, dude. Wild day across the board. A wild week. Another wild week tomorrow. Another wild day tomorrow. Yowza. Okay, look, I have a couple things for you before you all leave. Okay, because we're about to wrap it up here in a second. I'm going to go spend some time with my wife and the family. Before you leave, I have a couple of things I want you to check out on your way out of the stream. Okay. I always like to give you guys the value during the stream. I rarely like to give you things during the stream. I just want to get to the value, give you the things that are important first. Okay. You're here for value. Now that it's over, I have a couple things I want to show you really quickly. First of all, before you head out, before you click out, hit the like button. It helps a ton. Okay. It really, really does help a ton. You don't understand how much it helps. It really helps a lot. Okay. Second thing I want you to know, if you want more of what we're doing here on the channel, if you enjoy the content, you find it's valuable and you want more, what I want you to do is I want you to head to the link down below and go check out TH Capital. This is our course community. When you join, it's a monthly subscription ranges from $25 to $35 a month. You're first and foremost going to get courses. I have 12 hours worth of course material on technical analysis, fundamental analysis, building portfolios, and an intro to stocks course. I have 4 more courses coming out over the next 8 weeks. Okay. Leverage trading and swing trading, retiring using stocks. These are all courses coming out soon. Stay tuned. There's also live events. We have 5 hours worth of live events already, and there's going to be more. Okay. We do these like twice a week, once or twice a week. In addition to the courses and in addition to the live events, you're also going to get access to the Discord server, which is where I post all of the things that I'm buying. You see 42% gain, like all the things that I'm buying, all the orders that I'm making. If you want to see what I'm doing in my portfolio in real time, it's available for you here. Okay. You're also going to join a community of people who win. And that is one of the things that I want you to understand. This is a community of winners in the stock market. Look at our guy, Pat, bro. $5,890 win there. Look at the homie. Full reversal on this. Look, 17% gainer. Look at this fella. Hold on, where's he at? Where's the boy at? $292,000 gain. This is a community of people who win. This is the community of people who win. The link is down below. Okay. The second thing I want you to check out, if you see me doing technical analysis, and I'm always looking at this, you guys know if you watch my channel, I'm always looking at this. If I'm looking at this meter, as the meter goes higher, that means the price is getting too high. This is when I start selling. When the meter is getting lower, it means the price is getting too low. This is when I start buying. And then I turn on these zones. I turn on these zones right here that tell me like where the buyers are going to step in and where the sellers are going to step in. This is called the TH Toolkit. Okay. The TH Toolkit is available. The link is down below. This is not a monthly subscription. This is a one-time sort of thing. One-time payment. One-time payment. You pay once, you get it forever. No matter what updates I do or anything, you get it forever. The people who use this usually end up in a pretty solid spot. Can't guarantee anything, but the link to that will be down below. Feel free to check it out. Finally, if you are trading stocks, again, I'm an affiliate partner of Liquid. This is the platform I was trading on. I liked them so much, got in contact with them, got on the phone call, asked them for an affiliate link because I want more people to trade on this because it's a win-win-win. Okay. They're a fantastic platform. If you use my link specifically, you're going to get discounted fees when you trade, which means you're in theory going to be able to reach a profit on your trade easier if you use my link specifically. If you just go sign up, you're not going to get it. And there's also bonuses and rewards as well. If you sign up with my link, you get bonuses and I get bonuses. Again, it's a win-win across the board. So if you trade 3x, 5x, 10x, 50x, 100x, and you're trying to get in and get out of stocks, this is a great platform. They don't try to focus on all that other stuff, too many of the other bells and whistles. It's just a fantastic trading platform that I've been using for a long time. I've deposited tens of thousands of dollars. I've withdrawn tens of thousands of dollars. That's linked down below. Those are the three things I want you to go check out. TH Capital, the Toolkit, and Liquid. Those are the three big things. I try not to, sell you stuff in the middle of it's not really my style, right? I'm not trying to turn this into this big overly monetized thing. I hate when I'm watching live streams and they don't get to the point. They just sell stuff the whole time. If I'm going to sell you something, because I am monetizing this channel, of course, it's a business, right? I'll give you all the value. And then if you want more from me, there's links down below. So as you're going to those links, as we exit out the stream, hit the like button. Check out Liquid if you trade. Check out the Toolkit if you want some extra help with your analysis. Come join TH Capital if you want access to me in the community. And we got some real big announcements coming for you TH Cap members very soon here. And before we go, W Jacob. I just got to say W Jacob. £2. I think that's a pound. I don't know if that's a euro or a pound because I am not cultured. Just want to say thank you. This week has been epic. Thank you, Jacob. You've always been in the chat. You're always active, and I appreciate that. It goes a long way. I love seeing regulars in the chat. So shout out to you guys. Yeah, I'm going to be releasing. There's always a promo code to TH Capital in my educational series. Okay. I always bury them in there. I don't know how people don't realize this yet. In a funny way, like every time I do an educational video, I bury a promo code in it. So if you want a promo code, we'll go watch the education series. They're there for you. Okay. So thank you all so much. I really appreciate you all for tuning in. It has been an outstanding week. This has been one of the most fun weeks of my life whenever it comes to just making content and stuff. Absolute blast. I can't express enough how much fun I've been having on this journey with you guys. I think we have something special here. I feel like there's going to be a day where I look at this page and it says 100,000 subscribers or something. And that will be one of the most special moments of my life. I've done it before. Again, I've done it before on the crypto channel. It took me years, 7 years, 6 years, 6 or 7. I can't remember. And if we can pull that off again here, I think we have something special. I think we have a community that can do something like that. And yeah, I don't know. I just feel like something feels different about you guys because I've been in these sorts of communities. I've been in live streams. I have alt accounts and I'll just go and chat or whatever. Something feels different about what we have going on. I don't know exactly what it is. And maybe I'm just biased because it's my community. So I might just be biased. But it's I feel like I know you guys. I feel like Treach and Freg and Jacob and Beanie and all the homies, Mark. Shout out Mark Babel, by the way. Volker, everyone. I don't know. I feel like we know each other. And then all the homies in TH Capital, I'm talking to these guys on the phone. I literally talk to them on the phone. And it makes me go like, damn, like we have something serious going here, something real serious. Like we could be something in this whole stock space. I genuinely think that. And I'm nothing without you guys. So I appreciate it a lot. I'm going to stop yapping. I hope you guys have a great day. I really do appreciate everything. Can't wait to see you in the next one. Bye, everybody.